is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Mr. Barr in the door as well. John Tucker scheduled to show up. Lisa Mateo here with a market check. Paul, into May, a sobering end to April. Things changed.
Exactly.
Yesterday.
I mean, have we gone away for the month of May? We're still here, Tom, on May 1st here. Got a little bit of a red on the screen here. It's all about the Fed here, Tom, and you and Lisa and John will have full coverage this afternoon. But I guess it's as you take a look at the Fed here, Tom, are we going to hear some different language coming out of the Fed Chairman Jay Powell? And what kind of question will Michael McKee ask to kind of kick things off?
He's going to have a real opportunity to do that. We're going to have an opportunity to frame the conversation for you, yes, in economics, but really how it folds over to the unthinkable, which is a higher rate regime. Kenneth Rogoff of Harvard with David Weston, and I am on the Rogoff page, which is about the real rate, and the inflation-adjusted rate, I'm sorry, Paul, continues to go up 2.28% on the 10-year yield. Paul, the Sweeney yield this morning, 5.03%.
I mean, you can sit there in a 2-year treasury, invest in your United States treasuries for 2 years and get 5.03%. I mean, that's a pretty solid return for a fixed income investor who's had nothing but pain for the past couple of years.
Let's set up the digital landscape for you. And of course, this goes for the Fed Decides this afternoon as well. We're on Apple CarPlay, Android Play as well. The Bloomberg Business app, it's free. On YouTube, I had a meeting yesterday with Ray YouTube.
Really?
Yeah, very.
Okay.
He brought people along. They all have pads of paper and pens, pencils.
Sure.
You know, they're taking notes. I'm like, what are we taking notes about? Anyways, YouTube,
That's the
digital, and it's the internet. Thank you. That's where I am as well. Search Bloomberg Podcast. It's out of Bloomberg Podcast. That's the page we're building here. And also, the complete replay is now available. You see that like 3-ish in the afternoon as well. It's the Interactive Broker Studio with our Bloomberg Business Flash on a Fed Day. Lisa Mateo.
You got it. And futures are lower ahead of Fed Day. They're trying to decide on interest rates. Also, words from Chair Jay Powell later this afternoon. Policymakers, though, expected to leave rates on hold once again. We have the NASDAQ futures down 0.6%. S&P futures down 0.4%. Dow futures down 0.2%. The 2-year yield at 5.03%. That's little change. The 10-year yield at 4.68%. And that is little changed as well. Over to commodities. Oil extending its declines. Brent crude $85 a barrel. NYMEX crude $80 a barrel. We have spot gold higher at $2,293 an ounce. Earnings also in the focus for today. We'll start with CVS Health. They're down 11%. Lowered its yearly earnings outlook for the second quarter in a row. Rising medical costs. That's really straining the company's Medicare insurance business. Then you have Pfizer. Their shares up about 1%. Raised full year earnings guidance. Also first quarter earnings and sales also beat estimates. And finally, Johnson & Johnson, news from them, they're up 2%. They say they're seeking backing for an $11 billion baby powder cancer settlement, and that's through a third bankruptcy filing. That is your Bloomberg Business Flash. Tom and Paul.
It's been going on since my kids were babies. I mean, the thing, when did that start, Paul? It's like, ancient history or show. We're going to start strong. Stuart Kaiser is going to be with us on the equity markets here in a moment. Tom Purcelli on later, of course, on Fed Day and the myriad challenges that Jay Powell has. But we start especially strong. Do you know she's an Iron Woman?
Really?
Gargi's out at Jones Beach.
Okay.
She's like, we're puny. I mean, Gargi is tough as nails with BlackRock. And, she's doing the Iron Man thing and all
Iron
that.
Man? What is
that?
Yeah,
it's like triathlon, but tougher.
No.
I don't know. Gargi's with us this morning. Gargi, thank you so much for starting strong. What happens to your world if rates keep going higher?
Good morning, Paul and Tom, long-time listener, first-time joiner. Really excited to be here. So what happens to my world if rates continue to go higher? Two things. Number one, there's going to be continued focus on selectivity within equities, and the areas of the equity market in the U.S. that have earnings growth are going to continue to outperform. So that's number one. Number two, and we've been talking about this for a while, and Tom, you and I have chatted about this before, but the long end, anything sort of longer than the 5-6 year part of the interest rate curve, is going to become more and more difficult for investors, especially given that there has been 5% that you can earn or more in cash. So I think two things for investors to keep in mind is staying in high quality in the equity markets and staying in the very front end to maybe the belly of the curve in fixed income markets. I think that's going to be the impact.
I'm looking at the real rate. Kenneth Rogoff of Harvard was with David West in Wall Street Week. Look for that this week. And Professor Rogoff is riveted on the real yield, the inflation-adjusted yield. I'm sorry, Gargi, if it walks like a duck, quacks like a duck, it's a duck. And the 10-year real yield, I'm rounded up to 2.28%. Is the real yield walking away from us?
It looks like, obviously it has risen pretty meaningfully for good reason. If we look at the month of April, everything that we have gotten so far, whether it's the payroll data, whether it was ISM in the beginning of the month, whether it was CPI and PCE, all of that have contributed to yields moving higher. What I will say, though, and this is something that we lay out in our spring investment directions, is owning real rates in the very short end, so sort of the 0 to 5 year part of the curve, we think make a lot of sense. And if you look at returns for the month of April, and if you compare sort of what STIP has done versus many of the other front-end securities or longer-end fixed income securities, you've actually been a little bit more preserved being in the front end of the inflation-linked curve. Why? Because inflation has surprised to the upside. And, for a big part of the month, oil was surprising to the upside as well. So we do think that front-end inflation can be a good place for investors to be invested in, especially at these really strong real rates. But again, keeping your duration short is very important.
So, Gargi, I like the keeping the duration short call here. Should I just park my money in the 2-year United States Treasury at 5.03%? Is that the trade, or should I take some credit risk here and maybe, I don't know, corporates or high yields? How do I think about credit versus just the Treasury market?
Yeah, look, it's really attractive. You look at 2 years, you look at where they are, where it is, and it's certainly very attractive. But I would also say that as of right now, the economy looks good. Yes, the first look at the first quarter GDP was a little bit softer than expected, but we're still growing much higher than what expectations were coming into the year. So credit, we think, will remain okay. And if you look at owning sort of that front end corporate credit, maybe in the 1 to 3 year part of the curve, you are picking up a little bit of extra carry, and we think that makes sense. And I want to highlight, though, that especially given how tight spreads are, both in IG credit as well as high yield. When you look at percentile levels, they're at their richest that they have been on a spread basis. But then when you look at all in yield basis, they're obviously a lot more attractive. So I think selectivity really plays a role here. So looking at, we're telling investors, if you're looking at high yield, go into defensive high yield, and look at, if you're looking into corporate credit or even securitized asset, go with an active manager that can actually pick the bonds for you, where you can earn your income, earn your carry, but at the same time be a little bit preserved for some of that downside given the level of the tightness of spreads.
All right. For those out there that want to take some equity risk here, I mean, I'm not sure what to do here. I mean, we've all kind of grown up over the last 15, 20 years with technology leading the way. Do I just stick with the big tech names, or do I try to find some value out there, whether it's financials or energy or consumer staples?
Yeah, so, again, if we look at just even since the earnings that have come out just over the last week or so, I think what we're finding is that earnings growth is coming, it is surprising to the upside, which is part of the reason why last week we had a okay week in the markets. I think focusing on areas of the market, of the equity market, where earnings growth remains stable, which companies which are able to generate cash flow, companies that very importantly have low leverage, and we call that high quality companies. I think that is what investors should focus on. And the question that we get over and over again from investors, from clients when they're building their portfolios is that, is this the time to get into cyclicals, and is this the time to get into small caps? And that is where, when we look at a portfolio analysis, we see that investors are largely overweight small caps. And we think that in this rising rate and a higher rate period, away from the small cap and into larger companies, larger cap quality companies is what makes sense.
Gargi, we got to leave it there, Gargi. We're out of
that's what
time. Gargi, we're out of time. Thank you so much. Gargi Chaudhuri with us with the BlackRock this morning. We'll get her back on soon. I got about 8 more questions. Way too short a visit. Gargi Chaudhuri there. I want to point out BitDog, 57,500. Paul Sweeney and Alex Steele dive into that at the 10 o'clock hour. With our news in New York City, John Tucker.
All right, Tom, new developments on the pro-Palestinian protests at Columbia University and across the country.
Shame on you! Shame on
At the epicenter of the protests, New York City police moved in just after 9 o'clock last night, entering Columbia University's Hamilton Hall with a ladder truck through an upstairs window, pushing through mounds of furniture piled up as barricades. As arrests were made, some people were led away by zip ties. Mayor Eric Adams did deliver a warning before police began making the arrests.
I'm urging every student and every protester to walk away from this situation now and continue your advocacy through other means.
In Los Angeles early today, the police were responding to a request for support on the UCLA campus after violent protests broke out there. Secretary of State Anthony Blinken continuing his push for a ceasefire between Israel and Hamas. He met in Tel Aviv today with the Israeli President Yitzhak Herzog and called on Hamas to accept Israel's terms for a pause in fighting in exchange for hostages.
We're determined to get a ceasefire that brings the hostages home and to get it now. And the only reason that wouldn't be achieved is because of Hamas.
And according to CBS News, the Biden administration is considering allowing certain Palestinians into the U.S. as refugees if they have family members who are American citizens or permanent residents. The Senate approving legislation banning the import of enriched uranium from Russia, sending the measure to the White House, which says it supports efforts to block the Kremlin's shipments of their reactor fuel. Russia provided almost a quarter of the enriched uranium used to fuel America's fleet of more than 90 commercial reactors. And a swarm of bees creating a buzz in the desert, giving the Diamondbacks a new hero. The start of last night's game between the Diamondbacks and Dodgers delayed nearly 2 hours after a bee colony swarmed the top of the protective netting behind home plate. Matt Hilton, manager for Blue Sky Pest Control, turned into the star of the night for removing the bees, earning a brief slice of stardom and the nod to throw out the ceremonial first pitch. Not bad.
Not bad.
Global news, 24 hours a day, whatever you wanted with Bloomberg News Now. I'm John Tucker. This is Bloomberg.
Was that in Los Angeles or in Arizona?
Arizona.
Okay, got to be. Very good. Okay.
Last night, 9:34 p.m.
I was asleep.
A guy named James out in Los Angeles, LeBron James.
Yep.
Bang is what he said. Tyrese for the 76ers. I didn't know who this kid was. Did you know him from Kentucky?
No, I mean,
no,
I didn't know how great he was until I was watching him these past couple of games. It's like amazing because Joel Embiid is injured, although he's still playing. But my goodness, the guy's good.
And what I would say here, and Rich, help me here, but we're starting to see now the kids that came through that got run over by COVID.
Yeah.
You know, his career in college was basically destroyed by COVID.
Yeah,
and so, you know, he's 23 and nobody knows who he is basically.
Yeah,
because there was no March Madness or whatever.
The New York Knicks fans know about him now, that's for sure.
Yeah, really exciting. Yeah. I'll tell you, folks, for those of you across this nation, New York City fired up, I say, with the Rangers and the Knicks and all that. Futures a negative 20. It is Fed Day. We'll decide. It'll be on Bloomberg Radio, Bloomberg Television, YouTube. Look for that 1:30 p.m. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Red on the screen as we begin a new trading month and also on the morning of Fed Day. We also have more information about jobs on tap for today. We have ADP will report private sector hiring before the markets open. Then after the open, it's on to the JOLTS job openings. We have a read on manufacturing and construction spending. We have NASDAQ futures down 0.6%, S&P futures down 0.3%, Dow futures down 0.2%. The 2-year yield at 5.03%. That's little change. The 10-year yield at 4.68%, and that is little change. To earnings we go. Got to talk Amazon, up 2%. The company's cloud unit posted the strongest sales growth in a year. That was thanks to rising AI demand, but its sales forecast for the current quarter did fall short of estimates. Then we have Advanced Micro Devices down 6%. Lukewarm revenue forecast. That was due to slowing demand for chips used in video game hardware. And finally, server maker Super Microcomputer down 12%. Quarterly sales tripled from the same period last year, but it did fall short of estimates. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Stuart Kaiser with us right now. Let's get right into it. An important conversation. He has been incredibly on this great bull market, a very articulate voice on having the courage to stay in. Oh, my word, a drawdown, 4.2%. SPX. I know you're going to tell me there's an opportunity here because you are a bull. What does your world do if Powell or Paul Sweeney force interest rates higher? What happens to the equity world if the real yield breaks through to 2.30, 2.32%?
I mean, there's definitely going to be pressure on markets, I think, if real yields keep rising. To us, it's more the velocity move than the level, though. I mean, I think if we move 20 basis points higher and then stabilize, I think equities could deal with that just fine. But, what we've had is just a very rapid, sort of acceleration higher that's been disruptive.
Am I stunned that the VIX is 16.08? When I look at the interest rate soup into the 130, the Fed decides, folks, today on Bloomberg Radio, when I look at where we are in a 16.08, that's feeling like a 20. Why is the VIX 16.08?
Yeah, look, I think the reason the VIX is I think lower than most people expect is because the market's not realizing a lot of volatility, right? The realized volatility over the last 10 days is probably 12.5. So it's pretty hard to get the VIX higher when day to day the equity markets just aren't moving that much. Rule of thumb, 16 VIX is a 1% move per day implied over the next month. That's actually high when you consider what we've had recently. So I agree, it feels low from a risk perspective, but just, with the markets as stable as they are, it's just hard to get it meaningfully higher from here.
Stuart, as you walk out to the Citi trading floor at 390 Greenwich Street in Lower Manhattan, are your traders there when they're talking to their clients? Are their clients wanting to take risk here, or are they more just, I'm sitting on the sidelines here until I get a better sense of what this Fed's going to do?
I think today for the morning, I think people will be sitting on their hands a little bit. There's no reason to take risk in the few hours before the Fed. I think in general, people were happy to take risk until 2 to 3 weeks ago, and then you had kind of oil move higher. You had some bad news out of the Middle East, and then frankly, what you're seeing in AMD, et cetera, overnight is a repeat of what we saw out of Taiwan Semi and ASML and Netflix, which were some big sort of semis-focused stocks make really large moves on earnings. And I think when that happened, it impacted us as well. We took a step back and said, wait a second, if these kind of high-flying stocks are under this much pressure with what I would consider decent results, then maybe we just need to be a little careful. So I think investors are trying to digest all these various risks. And then obviously the GDP report definitely got people's attention, without a doubt.
How about earnings? We're halfway through kind of earnings season here. We had Amazon last night, Apple after the close tomorrow. What are you guys seeing in earnings, and what's that doing to your call here? Is it impacting your call at all?
I tell you, we were a little concerned going into TMT earnings last week. Frankly, they put up solid results, and that got the market higher. So I think by and large, we're getting what you would call a pretty solid quarter, like a modest beat on revenue, solid beat on EPS, and the biggest stocks in the market are delivering. So I think that's gotten people fairly comfortable after what I mentioned was a little bit of a wobble kind of coming into the season.
This came up at the dining room table last night.
Really?
Shake Shack catered. It was great. Afterthought picked out the food. Stuart Kaiser came up at the dining room table, which is how partitioned to this market. My basic take is forget about Magnificent 7, the Magnificent 20 are ever separate from the other 400x number on the SPX.
Yeah, I think that's right. You know, Tom, we've been sort of in this broadening theme. The problem with the broadening theme for us has been it doesn't work in two conditions. One, when you have risk rising, and two, frankly, during earnings. Because the fact is your Microsofts, your Apples, your Amazons, your Googles are just putting up huge numbers. And it's very hard to get the market to broaden out.
Okay, but how do you use your theory in textbooks? Somebody had out a summary of the net new revenue of the three major cloud companies. We've never imagined those numbers before. So then how do you do your day-to-day work? How odd this tech juggernaut is.
Yeah, I mean, look, it harkens back a little bit to the late 90s when you were basically introducing a new technology into the system, and you assumed and forecast really large revenue growth, but you were a little uncertain about, both the size and timing of it. So I think what you're having is, to your point, people are compartmentalizing a little bit, right? Like, I need to have some AI exposure on. Let me choose the way to do that. And then off to the side of that, I kind of need to model the rest of the market, as a little bit independently. So it is a challenge, but it's a good challenge to have, right? I think it's a good challenge to have that you have this large thematic revenue growth impulse kind of coming through the system. And look, this is why, we've kind of joked the NVIDIA earnings report in late May is priced as big an event as payrolls on Friday. So to your point, it just knocks
Say
home.
That again. That's important. Say that again.
So if you look at S&P 500 options, they're pricing as much risk into the NVIDIA earnings print as they are into payrolls this Friday. So to your point, this not only is it a big theme, it's also an uncertain theme, and even at the S&P level, that risk is being priced very aggressively.
So Tom's been long the Magnificent Seven. I mean, he doesn't even come into work many of these days. He's planning his trips to Paris and everything. The rest of us, though, what do we do? I mean, if we've do I look at energy? Do I look at healthcare? What are the smart people at Citi saying these days?
Yeah, I think there's a couple sectors people are kind of sniffing around. One is healthcare because healthcare underperformed so much last year, and you also have the GLP-1 story, which is not quite an AI theme, but is sort of in the same general sort of category as that. I think industrials is a big focus right now, just because of the IRA spending that's coming through the system that's just hitting company revenues right now, and some of the reshoring story kind of falls into there as well. So I think industrials and healthcare are two big areas of focus for a lot of clients. It's not just by the sector. You're choosing stocks and subsectors, but those are very important.
I'm looking at 15 upgrades today on Amazon across global Wall Street, including Citigroup, and they're all different levels, and it's a parlor game. Where are you a year now on SPX? Does Stuart Kaiser have to lift your SPX numbers simply because of tech?
Look, I think it's definitely potentially an upward lift on the EPS number. So Scott Kroner, who runs equity strategy, he's at 245. We're a little bit above consensus on the EPS number.
And you're going to nudge that higher, you're suggesting? I understand.
We shall see. It looks like we're going to beat consensus by more than 5% for this quarter. We revised up consensus by 3% last week. So certainly the pressure is to the upside, I think, for the earnings
Rich,
estimates.
can you run out Stuart Kaiser and a Bloomberg? Red sticky. Kaiser says 250 from Citigroup.
Exactly. Citigroup, 388 Greenwich is where I work, but the people who actually get stuff done are at 390 Greenwich, the traders, the salespeople. What are your traders saying to you as you walk through the floor these days?
I think people have been a little surprised at a little bit of just the lack of activity the last couple of weeks. The markets have been moving, but volumes have probably been a little lower than you might have expected. I think the one notable thing in the last couple of weeks is you did get a bid for sort of tail risk protection about a week and a half ago. So people buying call options on the VIX, to Tom's point. So I think that was pretty notable. It's the first time we've seen people kind of making sure they had that tail risk protection on.
I can just say, folks, it's fascinating right now. We're going to have a lot of fun through May on Bloomberg Surveillance. Stuart Kaiser, thank you so much for coming in. He's with Citigroup. Are you doing Ironman? We just had Gargi Chaudhuri on. She's doing Ironman. Are you doing Ironman?
I'm more probably have a half Ironman type fella.
Half Ironman. Good. I'm the 1/8 Ironman. Lisa, have you ever done Ironman?
No, just a marathon.
Just the marathon.
But did you do the half or the 1/8 or the whole marathon?
I did the half, and then I did the marathon.
Okay, Paul is just sick.
Never again.
She's a beast.
If Sassauer was here, he's
my goodness.
I feel puny. Futures at -17. Dow futures at -70. Let me give you that level on the Dow, 37,923 on Dow futures. It is Fed Day on Bloomberg Radio, Bloomberg Television, YouTube, 1:30 p.m., the Fed decides. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Paul, you nailed that. From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a lower open this morning. We have NASDAQ futures down 0.6%, S&P futures down 0.3%, Dow futures down 0.1%. The 2-year yield at 5.03%, that's little change. The 10-year yield at 4.68%, and that is little change. To earnings we go. New York Community Bank Corp up 13%. Its charge-off provisions for potential loan losses, well, that declined in the first quarter from the previous 2 months, but the results, they were actually better than expected after that rough quarter that it did go through. Kraft Heinz shares down 3%, reported a steeper than expected drop in organic volume for that first quarter. Net sales also trailed estimates. And Yum Brands, you know them, KFC, Pizza Hut, Taco Bell, down 5%. Sales fell actually for the first time since 2020, so a hit for them. Starbucks actually saw that same picture too. Consumers pulling back on spending, shares down of Starbucks 12%. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciated. Good morning on a Federal Reserve Day. And just a lot of good guests coming up. Tom Purcelli will join us on wage dynamics, particularly Gina Martin Adams in the 9 o'clock hour. Ooh. Is she going to say sell in May and go away?
No,
I don't think so.
I don't think so.
Not a chance. This is a joy. Now, just to be honest, and I need to frame this out, it's appropriate. In Zurich, Switzerland, most of the major business decisions are decided at lunch at the Brasserie Lippe.
Yep.
And it's Brasserie Lippe. It's a lovely, lovely place. You go in. Paul, the prices, put a decimal point over to the right. It's just a bowl of soup is like $40.
It's okay.
That's where the big decisions are made, including at Vantabell. You may not know the name, but Vantabell is an esteemed Swiss shop, and we are beyond honored that Christo Rondu-Dulin, their head of investments, is with us today, and also their chief executive officer, some real executive duties, along with their wonderful study off London Business School of the markets. With the soup that's out, thank you so much for being with us. With the soup that's out there right now, with the Fed decides, how does our world of investment change if yields break through to new higher levels?
I think it's changed already since the Fed started its tightening cycle. But that is, in a sense, going back to a real normal. The abnormal was the period that we had after the financial crisis with quantitative easing after quantitative easing. But the truth is, just look at the name, fixed income should have an income. It did not for like 15 years. But it changes the world of asset management because many portfolio managers will have not lived through this type of cycles.
We had a free lunch of negative interest rates, huge effect in Europe and on European banking and all that. Now I guess we've returned to normal. Are real yields across the continent and in America, are real yields normal or can they drive higher?
I think they could drive higher depending on what happens to inflation. This is not a desired outcome, obviously, and that's certainly not the one that the central banks desire, nor the one that they anticipate. But they could, let's say. I think the main thing is the central banks will go after inflation. The central outlook is that inflation has been tamed, not sufficiently that we have the confidence rates can now start to go down.
I'm going to get in trouble. Should Chairman Powell raise rates today, stun the world?
No, I don't think he should. I don't think he should. They don't know if inflation is rising or whether it's been put in the box.
I almost got him
but for sure they should be cautious. No, sorry.
So, Christo,
got close, but no.
As we think about global allocation here, what are you telling your clients these days about global allocation? U.S., Europe, Asia, equity, fixed income. What's your allocation these days?
You know what? I think the one thing is we got all put off by what happened in 2022, thinking this is the end of having multi-asset portfolios. But no, it was not the end. Okay. It was not the end.
Because there's no place to hide in 2022.
No, there was no place to hide. But this happens. It's out of the ordinary event when indeed it's driven by a tightening cycle, but doesn't mean you don't invest in multi-assets anymore. Certainly not when you have income again.
Right, so exactly. So, I mean, I think, how do you guys think about regionality here? We talk a lot here, we hear a lot from investors about the economic exceptionalism of the U.S. in terms of its economy vis-a-vis Europe, vis-a-vis Asia, particularly China. How do you think about regional allocation here?
Well, I mean, the thing is for the first time, we are likely to have we are likely to have a divergence indeed in the monetary cycle. So that is to be taken into account more, I think, on a tactical basis, because that's going to change when fixed income in one region reacts versus the other. Long term, you think about the strength of an economy and the strength of the businesses. And I wouldn't write of the U.S. just now.
How do you? Well, thank you. That's our headline for this morning. The lady from Switzerland says, "Don't write off America."
Exactly.
Thank you. On an actual basis, and the Swiss have always, I think, come in low on this, which I have great respect for. But is it a single-digit world? Is it mid-single-digit equity returns? Is it higher single-digit? Can we have a tech overlay? This means we're going to do better. How do you manage your equities forward? Where's that return?
I mean, honestly, this is very hard to put on numbers. That is going to be a tough one. I think it can be a high single-digit return, given where we are. Certainly, in terms of the scenario that's now in the cards, one where we have a chance of soft landing. It's not a done deal, but there is a chance. So I think the best guess would be around a number like this.
You know, here at Bloomberg, we have a business here, New Energy Finance, and they really look at the economics of the energy transition here. And they do a phenomenal job on a global basis, again, looking at the economics driving energy transition. How do you think about that from an investment standpoint at your firm?
Well, I think it's a key theme. Obviously, it got again a bit hurt in the last 2 years because those stocks being more sensitive to rates, they kind of got out of fashion. But let's look at it again from a structural perspective. The needs are there, so the investment will have to happen. So the companies who will be winning that game will also be good investments. So there's no going around that theme. The truth is, it's not either you do good or you do well financially. You'll have to do both.
Just because of time, an all-in question, which is unfair, but two parts. You had to enjoy the Swiss banking collapse of Credit Suisse. And I look back 40 years at UBS taking out Swiss Bank, whatever, in the back. Vonable has outperformed UBS over the last 10 years. And at the same time, you've got Swiss franc dynamics, which are absolutely original, and the Swiss National Bank dealing with that every single day. What does Swiss franc indicate to you? What does CHF look like, Euro Swissy or even dollar Swissy?
I think it's been a one-way trend, really, one-way traffic forever, and has a lot to do with the fact that Switzerland has lower inflation. So when we look at it nominally, of course, you will have that constant pressure. That is one aspect. The other aspect is, nevertheless, the political stability that is of course, supporting the currency. But the key aspect is the inflation differential when you look at the exchange rate on a nominal basis. Now, it is a strain on the economy to an extent, but it's also an economy that has learned to live with a strong currency, and that seems to be sticking.
Can Swiss watches take on the iWatch, the Apple Watch? I mean, this is a huge deal.
I got my Swiss watch on. I'm very happy.
We're all,
I think it's different customers, right?
Yeah.
I think they're more different customers. It's less linked to it's less linked to the exchange rate than it is to the actual demand. I mean, in the end, it goes down to the demand way more than the exchange rate.
All the
to be
chargers
honest.
are in my bedroom, and all the iWatches sit there like a lead brick, and everybody wears real watches.
No idea how it works. I still wear them. So just give us a sense, Zurich, the person on the street, how are they feeling about the Swiss economy, their economy, inflation, all those types of things? Because here in the U.S., there's a lot of angst here, particularly about inflation.
Yeah, no, I think actually in Switzerland, I have the impression walking in the streets that the morale is still good.
Yeah?
Okay.
Yeah.
Oh, I wouldn't.
Well, this has been wonderful. Thank you.
Another road trip for us,
A remote from Brasserie
Another one
would be great. Thank you so much. Crystal Ronda driving the ship at the venerated Vantable. They are in Zurich, Switzerland, with a good perspective there on a different view, I should say, from Zurich, to say the least. Futures at negative 20 down, futures negative 76. Program note, again, 1:30 this afternoon across Bloomberg Radio, on YouTube, on Bloomberg Television. John Farrell, Lisa Bramwitz, and myself, we will do the Fed Decides. And I guess the zeitgeist is the chairman could really move the markets with delicate comments, particularly after the equity performance of the last number of days. SPX futures back to 5,047. With our news in New York City, John Tucker.
All right, thanks, Tom and Paul. Police moved in last night, shut down the epicenter pro-Palestinian campus protests. This was the scene at Columbia University in Upper Manhattan last night.
If you refuse to disperse, you will be placed under arrest and charged with disorderly conduct.
Well, the NYPD moved in shortly after 9 p.m. Using a ladder truck, they entered the upper floor of Hamilton Hall, where protesters had barricaded themselves inside, occupying the campus building. That seemed to be the final straw for the university officials and Mayor Eric Adams.
They are actively creating serious public safety issues at these protests.
Protesters bound in zip ties were led away to waiting buses by bystanders as bystanders shouted at police. Columbia officials threatening expulsion for any student who refused to leave the occupied buildings. The NYPD said this morning 40 to 50 people were arrested. Well, that was the scene in New York. In Los Angeles, police responded to a request for help at the UCLA campus. Clashes broke out early this morning at a pro-Palestinian encampment after the university declared it unlawful. Now, while campus protests continue across the nation, 3 more university presidents being called to Capitol Hill to testify about anti-Semitism. The presidents of Yale, UCLA, and the University of Michigan will appear before the House Education Committee. That's on May 23rd. Clinics, patients, and abortion rights activists in Florida bracing for the impact of a new law that will transform the state overnight from one with the fewest restrictions for the procedure in the South to a place where it will be all but banned. The 6-week abortion law signed by Governor Ron DeSantis last year and confirmed by the Florida Supreme Court earlier this month takes effect today. And Harvey Weinstein due back in a New York courtroom today for his first appearance since an appeals court last week overturned his 2020 rape conviction and ordered a new trial. The preliminary hearing in Manhattan expected to include discussion of evidence, scheduling, and other matters. That's according to Weinstein's attorney. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom and Paul.
John, thanks so much. John was doing the news in 1694. That's when the first sell in May concept came, that, the summer comes in.
Yep.
Things get sleepy, you get out. Meb Faber, good morning, Meb, out in Los Angeles. He's up and about. He's tweeting out and all that. Meb Faber, great investor, has done the best summary of this. He did it like a decade ago, but it's germane today. This doesn't go away, Paul, because there is some research validity to it, but it's sort of kind of like validity.
Yeah,
it's not like a rule. It's not like certain. You don't sell in May. It's your peril.
But boy, if you had a good first quarter like we did, up 10%, if you just said, all right, I'm done, that's a good year for me, I'm up 10%. Because now the S&P is up about 5.5%, so we've given some of that, almost half of that gain in the first quarter back here. But, I think the focus now, right now we're on, obviously the Fed as always, but it's been on earnings. And earnings surprises on the EPS side have been running kind of 8, 9, 10% above expectations, which is good. But it's been mostly on the margin side, Tom. The revenues kind of come in generally in line with expectations. So how long can corporate America continue
I'll
to
lean
deliver?
on Julian Emmanuel over at Evercore ISI. He does a great summary of that. But I would just suggest that, MEB goes back to 1930, and there's some studies, and some say, it's not really there. It's like a media thing or an old folk tale. But others say, there's a little bit of interest here, and like it gets slow in the summer, and
Yeah, I'm
excited. We're biased.
Colin,
stay riveted to Bloomberg surveillance.
Colin of the Twins granted me some Fridays off in the summertime.
Really?
I feel blessed. I'll be taking some long weekends. How about that,
John? Did you get this memo? I didn't get this.
Exactly.
I'm just learning about this now.
Exactly. So that's how you have to
this
play,
This is going to impact my life, Paul.
This is going to impact John Tucker's life. So
futures at -21, Dow futures -73. The sell-off yesterday. It continues this morning. The 2-year yield 5.03%. The Fed decides 1:30 this afternoon. From New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are lower ahead of the Fed's decision on interest rates, and words from Chair Jay Powell later this afternoon. Policymakers expected to leave rates on hold once again. We shall see what happens. Our coverage begins at 1:30 p.m. Wall Street time, right after the surveillance nap. Over to NASDAQ futures right now, down 0.6%. S&P futures down 0.3%. Dow futures down 0.1%. The 2-year yield at 5.02%. That's little change. The 10-year yield at 4.67%. That's little change as well. Want to head over to earnings because they're in focus today too. We've heard from CVS Health down 11%. Lowered yearly earnings outlook for the second quarter in a row. You have Pfizer, their shares up about 1% right now. Raised full year guidance earnings, first quarter earnings sales beat estimates. Johnson & Johnson, some news from them. They said they're seeking backing for an $11 billion baby powder cancel settlement, and that's through a third bankruptcy filing. That is your Bloomberg Business Flash. Tom and Paul.
Euro yen, 168.50. Rebecca Patterson, thank you for the clinic yesterday. Ex-Bridgewater, Bessemer, and J.P. Morgan. And Paul, this won't go away.
No.
This was really good. Kit Jukes with a brilliant note this morning, just saying, look, the intervention money is puny. It's just they're not throwing enough at this.
No.
If they're serious.
Yeah, I just don't know what they can do for this yen here. I'm like 157.88 against the dollar, Tom. And again, we were at 160 just a couple of days ago. So to what extent is the Bank of Japan stepping in?
I did the yen, the number of Chinese yuan as compared to the Japanese yen.
Whoa, that's a
Paul,
cost.
it's got like a 30% move. I mean, strong
I'll
yuan.
take your word for it, yeah.
If I'm in Beijing, I'm like, Jerome, do something.
Exactly.
We'll have to see.
Well, here,
it's,
this afternoon.
It's fascinating into the Fed decides. And the heart of it is, you nailed this, Paul, just find a center tendency. What do we do with a 5.05 or a 5.10 2-year yield?
Oh, boy.
That's my major thrust today.
I mean, you go long, don't you? The short on the Treasury curve at 5.02% today. How about that?
Yeah, and the real yield here, I keep harping on that, 2.28%. Folks, how's our world at 2.32% real yield? I think these are important levels, and it'll be fascinating question to question within the Fed meeting how that data gyrates, I should say, as well.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages, particularly on a Fed day. It's brought to you by Interactive Brokers. Interactive Brokers, they charge dollar margin loan rates from 5.83% to 6.83%. Rates subject to change. Learn more at ibkr.com/compare. I looked at Lisa's newspapers today. I get a preview from her people, and
I know she has people.
wow! I mean, there's like 18 stories to pick.
There's a staff behind this. I'm telling you, a staff of one. All right, we'll start at the Wall Street Journal. It has an interesting story. Americans dividing their food shopping among different stores to save money. Consumers making 8% more trips to different stores because that's a big part of their budget, right?
My mother used to do this.
I still do this.
Do you really?
I
So
go
what do you
to the
do?
farmer's market for all my produce.
Okay.
So because it's cheaper to get
So
it
does
there.
your town have a farmer's market?
It does.
Okay, there you go.
Yeah, so I
Okay.
go to the farmer's market for the produce. Then I get, things I need here and there at, the local town supermarket. And then I go to Costco for the big stuff that I can just save in the long haul.
Yep.
and
How
then
much do you
freeze.
save at the farmer's market?
Oh, significantly. Sometimes half the price.
Half?
Yeah,
Like
no, it's a big difference.
oranges, half the price.
Strawberries, berries, all the berries.
See,
I
the
save.
farmer's market in my town is more of a social thing. Kind of
It's-
see and be seen on a Saturday.
Exactly. You show up. Here's the difference, folks. Lisa's out there with bags of berries.
Exactly.
I have my good friend Bob in Washington. That's all he eats is berries,
Yeah.
and that's all right, Lisa. Like
Good for you. It's
gallons of berries,
Yes.
right?
Antioxidants.
We should go there and get our apple cider for the kids and walk around. We're all
Where
good.
Paul lives, the farmer's market is a bunch of Range Rovers
Right,
pulling up.
exactly.
Going,
Investment
what
bankers
time
pulling
the
up.
Giants play?
But it's
Next.
true. It saves a bunch of money. I'm telling you, it gets tight. So the next one is from the Financial Times. Pfizer actually looking to cut out that industry middleman. It
like
wants
this.
to sell some of its medicine straight to consumers. So it's developing this online platform. You can order medicine like Paxlovid, a migraine nasal spray. It'll launch later this year. So it's connecting customers with telehealth consultants to prescribe it, and then a drug dispensing partner who's going to ship out the prescription. But Eli Lilly, I mean, they did something similar earlier this year. So they're just trying to kind of cut out that middleman.
And hopefully at a lower price.
I was about to say, maybe the price.
Well, first of all, President Biden and former President Trump both wanted to lower prices. I mean, Donald Trump made a big deal about this. Are we actually going to finally get prices like 18 other countries?
Oh gosh,
I don't know. That is. I mean, I'll tell you what. Here's an issue that I will never profess any knowledge of: healthcare economics. I just don't understand it. I mean, you can get a PhD in that.
You can be Uwe Reinhardt down at Princeton, who was very generous to us years ago, the late Uwe Reinhardt. And
I mean, who pays for what?
It's a mystery, yeah. What else depressing? What's next?
Well, you can also get cheaper overseas as the weight loss drugs, too. That's another thing. That leads to our next story. This is from the New York Times.
This is really interesting.
Yes. Okay, so the weight loss drugs are very popular, but the stress around social etiquette, that is becoming an issue. Like, is it okay to ask someone if they're on weight loss drugs, or is it rude? That's the question being going around. Barbara Streisand, she sparked a debate. She was commenting on Melissa McCarthy, the actress's picture. She said, "Are you on Ozempic?" and people got offended by that. Like, how can you ask, her something like that?
So that's personal information, I guess.
That's what they're saying. It's that borderline now. Like,
boy, you
is
look
it
great.
okay?
You lost a lot of weight. Good for you. And just leave it at that, I guess.
Yes.
Okay.
No one's.
And I've actually experienced this with an acquaintance, and I was told, do not mention the drug. Just say congratulations on your weight loss.
Because then you're suggesting what? They need extra help, or
I don't know.
It's all new. To be honest, John Farrow was way out front on this. I was like, look at it, John.
Well, he's got like no body fat, period.
No, he doesn't.
He doesn't do it.
He's in the gym like at 10 a.m. But, Farrow was way out front on this. And I look at the whole thing, and I go, I can see if they're on Ozempic. Lisa, can you tell?
Well, in the phase, I mean, my aunt's on it. She dropped like 40 pounds.
Wow.
I mean, you could tell right away. But it's that question. Like, I knew she lost weight, but I didn't say, "Hey, are you on Ozempic?" It's kind of like she suggested it to me.
Can
like
you get it now, Paul? You've been great on this.
Yes.
Can you get it now?
Yes. And actually, what we've learned is they will only put you on it, get you started when they feel like they can always have your refills done. So it's a supply issue. Once they feel comfortable about the supply, they'll put a new person on it, and that seems to be how it works.
That was depressing. Next.
Here's another one. The Paris restaurants. Yes, they are scamming tourists ahead of the 2024 Olympics for tips. Okay, because tipping culture in France, as you know, it's different than in the U.S. Okay, they have a legally mandated 15% service charge.
Whoa. They have a legally mandated what?
15% service charge. Okay. Menu prices often higher to cover it. It's called a pourboire. How do you say it, Tom? Help me with this. Pourboire in French.
It's really interesting.
It's a different tipping culture, but the restaurateurs are playing into their international guests' kind of ignorance by nudging them to pay like they would in the States. So they're good. You may start to see the tablets where they flip it around and it gives you that little percentage.
Yep.
Even though the tipping culture is different in France.
Obviously the first thing I learned when I moved to London in '87.
Oh, you did? Oh.
No tipping. It took me weeks to figure that out.
My take on this is they love Americans because most Americans tip over there like they tip in America, which the French love. But the worst, I get upset in London. The way they have it set up in London is detrimental to the workers. It's not fair to London.
You don't tip
in
London, do you?
No, it's terrible. They're taking.
But I always leave my change on the bar.
Nobody has change in it. Nobody carries money anymore, and it's really unfair in London. And in Paris, my experience is they love Americans. Like cab drivers will fight to take the Americans. Not that they could ever tell I was American.
How do you tell?
And Tom has the standing tables at all the best restaurants in Paris.
There you go.
So he's got his people over there.
Starbucks, les book de star. They know who I am. Lisa Mateo, newspapers. Thank you so much. Greatly appreciate that this morning. The tape deteriorates, Paul, into the Fed meeting, into this uncertainty. I'm sorry. Futures negative 24 say a lot. How about May songs? Well, okay. David in Brooklyn said, you've got to play Arcade Fire. I wore my black t-shirt, my black pants this morning. Arcade Fire, month of May. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene at Bloomberg Surveillance on a Fed day, 1:30 p.m. The Fed decides. You'll see that on Bloomberg Radio. You'll see that on YouTube as well. Speaking of YouTube, search Bloomberg Podcast Special Announcement. We did it a couple days ago, and it's out now. The complete replay of the show, 7 to 10 a.m. I leave. Sweeney's with Alex Steele. Then he leaves, but you can still see and hear Bloomberg Surveillance the entire 3 hours. Ready? 2 hours, 56 minutes.
Okay, got to cut it down. Cut it down a little bit.
Cut it down. We took 4 minutes out. But you'll have that out on YouTube. The replay, very, very popular. Thank you so much for that interest. Good morning on Apple CarPlay. A huge day here. And the headline is markets deteriorate yesterday. Markets deteriorate into May, Paul, this morning.
Yeah, we're going to hear from the Fed this afternoon, Tom. I think maybe on the margin, folks thinking that this Fed may come out a little bit, maybe more hawkish than they have been. We'll have to see.
Well, we'll have to see from the chairman, and the damage could be something here. Again, I'm working off the real yield. Wow, 2.28% honest, not a roundup. 2.28% on the 10-year real yield. That's my number one statistic this morning. Bloomberg Surveillance, brought to you by Cohn-Resnick Advisory Assurance Tax. Cohn-Resnick can help your business quantify its financial exposure using risk-based strategies and analytics. Visit Cohn-Resnick.com. Paul, I was over having, the basic breakfast at the St. Regis.
Yep.
Completely under construction. They're renovating it.
Are they?
And they took me up to the upper floors where I was with Cohn-Resnick.
Yep.
A couple of their events.
Yep.
The Cohn-Resnick events.
They're good. Good folks.
The view was great from the St. Regis. Then I looked at the price for breakfast. I was like, ooh, okay.
Inflation.
They're having to shop other restaurants. Futures at negative 22 right now. With our Bloomberg Business Flash, Lisa Matei.
Good morning. Red on the screen as we begin this new trading month and on the morning of Fed Day as well. We also have more information about jobs on tap for today. About 15 minutes from now, ADP will report on private sector hiring. After the open, it's on to JOLTS job openings, a read on manufacturing, construction spending as well. So we have NASDAQ futures down 0.7%, S&P futures down 0.4%, Dow futures down 0.2%. The 2-year yield at 5.03%. That's little change. The 10-year yield at 4.68%, and that is little changed. To earnings, Amazon still up 2%. The company's cloud unit posted the strongest sales growth in a year. That's a big thanks to rising AI demand. But its sales forecast for the current quarter did fall a little bit short of expectations. Then you have server maker Super Microcomputer getting hit this morning, down 13%. Quarterly sales tripled from the same period last year, but it just wasn't enough, still fell short of estimates. And Advanced Micro Devices down 6%. Lukewarm revenue forecast, but that was due to slowing demand for chips in video game hardware. That is your Bloomberg Business Flash. Tom and Paul.
Thank you, Lisa. Futures negative 21, the VIX 16.17. Victoria Bills joins from Chicago right now. We're thrilled to have her on from Banriana. What I love about her is she does a strategy note, and then heaven forbid she actually has individual stock. How quaint.
Exactly.
A strategist with individual stock ideas. You got NVIDIA in there, Victoria. What was your sum of the tech juggernaut we see into Apple tomorrow?
Hey, good morning, and thanks for having me. Honestly, I still continue to remain very positive on NVIDIA. I think a lot of the core thesis surrounding the stock is again the continued push through AI and what we're seeing, particularly in Web3. A lot of these programs continue to run on NVIDIA chips. And if we're also talking, for example, about crypto, a lot of those crypto mining companies run off of NVIDIA, like GPU processing chips. So the demand for NVIDIA products continues to remain very strong. And despite what we're seeing in terms of what's happening, for example, with Super Microcomputer, or even for Apple, I think there still continues to be a play when it comes to the longer term goals and the longer term gains to be made in the technology sector.
Do you have a buy on Apple?
I do have a buy on Apple. A lot of how I think about Apple right now is thinking of what's happening with the new VR devices that they've just put out. I think it's very much kind of Apple's coming their new wave of technology as they did in 2008 with the iPhone and the introduction of the iPhone This is very much an introductory product in terms of their work in the VR space, but it's the beginning of an era in terms of Apple being innovative again.
Yeah, you're being charitable, to say the least. Paul, I just want to say, and for
maybe
people,
not on the iPhone front, but definitely when it comes to other
the
spaces.
lawyer stepped in 20 years ago and says strategists can't talk stocks, stock people can't talk strategy. And there's a few firms, Ed Hyman, Evercore ISI, and Victoria Bills at Banner, and say, no, we're going to tell people we believe, like, this is the stock to buy. I love this.
Exactly. Victoria, how do you think about valuation here? I mean, we're kind of halfway through earnings season here. Earnings come in a little bit better than expected, but a lot of folks are concerned that maybe this market is stretched from a valuation perspective. How do you guys think about that?
It's definitely a little hot, I would say. But I think that also has a lot to play with the fact that if you invested very early on in some of these companies, whether that's Google or Apple and things of that nature, you're kind of looking at these companies and you're looking at not just their price to earnings ratio, and you're probably thinking, like this is the valuation is a little bit on the too sweet or too good, like too hot side of things.
Yep.
However, I think that, again, like this is not just because of the high inflation environment that we're in, but just overall, like the markets always are going to tend to go up. And so pricing in, for example, that increase in terms of pricing, that increase in price just is something that we have to factor into when we think about valuation.
You know, we saw results from Coca-Cola yesterday. Tom was calling out yesterday, incredible pricing power for some of these companies like a Coca-Cola. How does that influence kind of some of the stocks you may look at? I mean, inflation remains sticky, but boy, some of these companies seem to have a lot of pricing power.
I mean, that's definitely true. And when we think about Coca-Cola, or if we're thinking about other consumer product like CPG companies, I think that these are companies that are very much like, when we think, like, you go to a restaurant, everybody's ordering Coca-Cola products. They offer that before they offer Pepsi. So it's always something that when we're thinking about the larger trend for consumer product goods, those are, I would say, value-based stocks in many cases. And most of the time, they tend to be the ones that, outside of like technology stocks, they tend to outperform, or they tend to do very well regardless of a high inflation environment or even in a recessionary environment. People are going to want their Coca-Cola in a bad time.
My question of the day, what happens to our world if rates nudge higher? What happens if the 30-year mortgage migrates above 8%?
Oh, no.
The 10-year real yield pops above 2.30%. How does our equity world change?
Well, get ready for the initial shock that happens first. But I think that, again, it's something the thing that to really consider here, and the thing to kind of take away, if the Fed decides to increase rates, for example, instead of cutting them, it's the increase in the rates is more so due to the fact that this economy is still running hot. And we are still, for example, seeing like a very high PCE. So if we want to cool down the economy, a rate cut is always a possibility. And how we think about, for example, valuation, how we think about companies, I like to honestly think about going back to the early 90s when interest rates were a lot higher. A lot of people in my generation are very much used to having 0% interest rates. We've had almost low interest rates for the past like 25 plus years. So I think that this is something almost turning back to the old normal rather than getting comfortable on these very, I would say, cheap, so to speak, like dollars and cheap valuations that were coming in for the past 20 years.
Victoria,
so I think that, a readjustment.
You got to leave it there. We're out of time. Victoria Bills, thank you so much on a Fed Day with Bannery on Chicago. With our news in New York City, here's John Tucker.
All right, thanks, Tom. A police response to the pro-Palestinian protests at Columbia University. Hundreds of NYPD officers went into the school last night, storming a building. Demonstrators had taken over and arresting dozens of people. Earlier, Mayor Eric Adams said outside groups were trying to take charge of the student protests.
It is our belief they are now actively co-opting what should be a peaceful gathering.
And clashes broke out on the campus of UCLA. The LAPD was called in early this morning. Pro-Palestinian and pro-Israel demonstrators began setting off fireworks and hurling objects at each other. This as the LA school declared the pro-Palestinian encampment on campus unlawful. A 6-week abortion ban taking effect in Florida today, replacing a previous restriction of 15 weeks. The National Right to Life president, Carol Tobias, had this reaction.
I'm very excited. About 50% of all abortions occur after that point in pregnancy. So this bill is going to save a lot of lives.
Well, last year, more than 84,000 people got abortions in Florida. The closest abortion clinic for someone living at Florida's southernmost tip will now be a 14-hour drive away in Charlotte. The Florida Supreme Court did authorize a referendum on whether to enshrine abortion rights in the state's constitution. Well, the New York jury in former President Trump's criminal hush money trial got some accounting testimony yesterday. Michael Cohen's former banker told jurors that the so-called fixer took steps to avoid scrutiny from bank officials when he created a shell company. This is a day off for the trial today. And the Biden administration today said it will cancel $6 billion in student loans for people who attended the Art Institute. That's a system of for-profit colleges that closed the last of its campuses in 2023 amid accusations of fraud, saying the chain lured students with pervasive lies. The Education Department is invoking its power to cancel student loans for borrowers who were misled by their colleges. And global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg.
Let's listen.
Maxi's got the ball, looking to go to overtime. Maxi for a three, straight away. It's good! 8 seconds to go, he made it! Sixers tied at 97. Got to stop Brunson.
97-5, the Fanatic, Philadelphia. That was just into, to get to overtime.
Yeah.
And they own the overtime as well.
Yeah.
Now, it's 3-2, right?
Yeah, and, the Sixers' great win. They stole that game. Stole it in the Garden.
ESPN said it was like a historic collapse.
Yeah, historic collapse.
Yeah.
They let it go. Now, the Knicks stole, I would argue, game 2, so maybe they're even up. But still, the Knicks up 3-2. They head back to Philadelphia. That's going to be a tough game, too.
And that gets us to the week. It'll probably get this Friday or Saturday.
Yeah,
right?
I don't know. I mean, it takes forever for these things. We're playing
Game 6 Thursday.
Yeah, we've been playing baseball, and we've been playing basketball and hockey until
I'm enjoying immensely Orioles Yankees. It's like playoff ball. It's weird.
And I love watching games in Camden Yards, Tom. It's 20 some odd years old, 22 years old. Yeah. It's just timeless.
I've had the honor.
And they were the ones that created that concept of the smaller park, retro, and it stood the test of time.
I had the honor, and I don't have her name in front of me, the woman that invented that, and she was so good at Camden Yards, they brought her up to Boston to restore Fenway Park instead of tearing it down.
Yep.
We'll get her on here. I'll talk to her.
Great job.
I'll talk to my friend David, and we'll get her on here as well. So lots going on here on the day. The Knicks are 9 p.m. tomorrow. Thank you.
Who's staying up to 9 p.m.?
Yeah,
Lisa Mateo's up. She goes all night.
I only got through the first half last night.
I'll see the tip and all right.
For the kids, 7 p.m. is
for
the kids as well. It's the third quarter. Go to bed. Futures at -20 here on a Fed day. Really interesting. And I'm going to go back to my center tendency, which is now at 2.28% real yield. My adults, including Ken Rogoff of Harvard University, talking with David Weston. You know what they go to? They go to the inflation-adjusted yield. It impinges business. It changes business. It's like clogged up oil in your engine. Things just get harder to do. Where is that tipping point? Is it 2.28%, or could it dare be a higher yield? From New York, Bloomberg surveillance.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a lower open. We have NASDAQ futures down 0.6%, S&P futures down 0.4%, Dow futures down 0.2%. Over to the 2-year yield at 5.02%. That is down 1 basis point. The 10-year yield at 4.68%, and that is little changed. Over to commodities, spot gold higher at $2,297 an ounce. We have Brent crude at $84 a barrel. Some news from Microsoft. Their shares up 0.5%, but the company has agreed to a major long-term deal with Brookfield Renewable Partners, and that's a supply renewable power to the company. It's ramping up its AI investment, as you know, new data centers for AI require more power. Over to Marriott, reported first quarter earnings that missed expectations. That was due to softening U.S. growth. And since we're talking hotels, we'll take it over to Hyatt. They are announcing that they soon should have Peloton bikes at the hotels. Nice. Peloton saying more than 800 Hyatt locations worldwide will get the bikes under this new deal. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Here on Fed Day, again, 1:30 this afternoon on Bloomberg Radio Television. On YouTube, The Fed Decides. Tune into YouTube, search Bloomberg Podcasts, and you'll get The Fed Decides. Myself, Lisa Bramowitz, and Mr. Farrow. We will do that this afternoon. We digress. Sweeney demanded. We have to talk Paramount. We have to talk media. The future of TV, and that can only mean Brian Weiser of Madison and Walls. Let me get one question in here before Sweeney takes over. Brian, what is Sherry Redstone waiting for?
I don't know. I mean, here's the thing. There's this fine balance between making the most of her personal position or her family's position and being mindful of any legal obligations that she has. And then there's any sentimental subjective preferences that she has. And I think it's what makes it so complicated. It's not just about the highest enterprise value.
So, Brian, it kind of goes to the bigger picture here. I mean, Sumner Redstone might look like the smartest person in the room because he sold out years ago before the media business, the deterioration, really accelerated here.
Well, you could say he didn't sell out. He exited the business.
Yep, exactly. So
he never sold.
Yeah. So, Brian, what do you think here? I mean, what's the future here? How are you thinking about some of these traditional advertising-driven dependent companies? Like the Disneys, like the Paramounts, like the Warner Brothers Discoveries, as they transition to streaming, are they going to make it?
I mean, here's the thing. If they keep doing what they have always done, they'll get what they've always gotten, and at least in recent years, which is to say a negative trajectory. I would argue that there is still lots of opportunity ahead for any of these companies, Paramount or otherwise, as long as they invest in the right direction for the future. And basically none of them are. That doesn't mean that they can't. But I've argued that, certainly for the ad-supported platforms, the pathway forward is to become a platform, meaning you got to eliminate this idea of being a television-based company.
Okay, well, this is so inflammatory, what you're saying, Brian. I'm going to cut you off. For example, I just saw on Variety, there's 5 pilots this season across 7 networks. 2 of the networks don't even have any pilots. What is the Weiser prescription to save streaming?
Well, I think that subscription-based pricing is one thing. There's a lot of room for pricing increases. That's one thing. There has to be a lot of investment in programming, and good programming too, right? Not just cheap programming. So that's part of it. I think that actually this is going to be a little bit of a different view, but I think that if they actually kept investing and didn't put the brakes on it, if they actually tried to become a global platform, if they doubled their spending on streaming programming, for example, and made sure that they were a more meaningful platform, they would have had liftoff trajectory, I think, in a way that would have helped sustain the business. The problem is that it's never going to be as profitable as the business is replacing. And I don't think that most companies understood that you're going from what would have been a 30 or 40% margin business to one that's more like a 10 or 20% margin business. How do you make up for that? You make sure you're 2 or 3 times bigger. And it makes sure that you apply your platform globally. You limit how much you are giving up your economics to other partners, which Paramount was doing certainly in much of Europe. They kind of underinvested elsewhere before kind of throwing in the towel with Sky Showtime.
So, Brian, what's just in terms of total ad spend, give us a sense of kind of, is there enough ad dollars to support broadcast and cable television as we all know it, as we all grew up with, or is it all going digital?
Well, this is where I'm going. If you're competing, and we're talking about two kind of parallel but separate things. One is subscription, getting consumers to spend money on subscriptions, right? In the United States, there's about $140 billion a year spent on subscriptions, video in various forms, right? Streamers right now are only tapping into about $40 billion of that. There's still a lot of money to be gained
but Brian,
from building a subscription
this is
product.
brilliant. And then we have such a respect for Brian Weiser, going back to Tom, shut up, Facebook will be successful. Brian, what's going on at the lunch tables in Hollywood? They're all sitting there with their perfect water for some perfect well in New Zealand. Okay, great. What are they actually talking about if they're so far off the mark of the economic opportunity?
I honestly don't know. I'm not at those tables, I guess. No, but I think that there's this inherent conservatism. It's true in most organizations, right? Like, there's a handful of people who can make decisions to make radical pivots or meaningful investments or bet the farm kind of actions. And those people would be the likes of Sherry Redstone, right? I actually think that Bob Bakish was doing the best he could within the constraints that he had to work with, from everything I know. And I think that the problem is there are a small number of people who can do it. And then they have to be able to persuade investors of their plan. And most aren't willing to do that. They think investors need their short-term returns. Investors need short-term returns when they're not given a persuasive reason to believe otherwise. This is something that most companies at the CEO and chairman level do not fully understand in my experience.
I mean, Paul, it comes down to the heart of the matter. At Michael's in Los Angeles, in Santa Monica, they're over their salmon and caviar carpaccio at $27.
Nice.
What are they talking about? Shouldn't they be like in a full panic, Paul?
I think, the question and Brian knows this very well, is trying to kind of replace that traditional distribution model of cable and satellite and all that great money that was associated with those subscriptions with streaming. So, Brian, as you step back here, you think about the Paramounts, the Warner Brothers Discoveries, I don't know, maybe even Comcast, I don't know. Who kind of is going to be standing here 5 years from now other than Netflix and maybe Disney?
Well, Comcast and Disney are definitely well positioned because they do have so many other revenue streams. They can sustain and support this transition to a much less profitable industry, right? And that will buy them time. And if nothing else, you can grow when you take share of a shrinking business. And so that's all good for them. I think that the industry level opportunity, though, as I say, on the subscription side, invest more heavily, not less heavily, in content. You can build a bigger business and do it globally because there are real efficiencies. Netflix has taught us this, haven't they? Other than Amazon and Apple, right. Everyone else has given up. Okay, on the advertising side, the fact that it's video, it's professional, it's premium video, doesn't matter like it used to. It just doesn't matter.
Yep.
Okay.
And here's what I'm saying, that today's studios, owners of networks, need to think differently about their advertising platforms. They need to be indifferent about the fact that they've got professional video. They need to be able to embrace the likes of YouTube and user-generated content.
Right.
They need to be able to embrace other content.
We got to leave it there. Brian, thank you so much. Brian Weiser there with Madison and Walls. That's exactly what I heard from Mark Thompson in the FT interview from CNN. He goes, how do we embrace YouTube? And folks, Lisa, Paul, that's what we're doing here. We're trying to figure out, a fossil like me is trying to figure out the new digital world. And Paul, it's moving at light speed.
It is, and it's just simply following consumer behavior.
Yes,
where are the consumers getting their content? You got to be there.
You know, there's a lot of these theories in these meetings, and it's just exactly as Paul says. What does a consumer want? We have heard you. You want YouTube, and you want the entire show afterwards so you can listen to it. Good morning out west. You want to listen to it later. We've got that now for you. It was hugely requested, and we have done that. It's Fed Day. The Fed decides. We do that at 1:30 on YouTube, on radio, on television. The Fed decides at 1:30. Jerome Powell will be our guest. From New York City, this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are falling, and this is on concerns about higher for longer interest rates. All eyes on the Fed's policy decision later this afternoon. Before that, we did receive another data point on jobs. ADP data shows U.S. companies, while they hired at a strong pace in April, private payrolls increased 192,000 last month, and that was after an upward revision to the prior month. JOLTS job openings that come out at 10 a.m. Wall Street time. So we have NASDAQ futures down 0.5%, S&P futures down 0.4%, Dow futures down 0.2%. The 2-year yield at 5.01%, down 2 basis points. The 10-year yield at 4.66%, that's down 1 basis point. Over to commodities, spot gold higher at $2,295 an ounce. We have Brent crude at $85 a barrel. Earnings also in focus today. We'll start with CVS Health. They're down 12%. Lowered yearly earnings outlook for the second quarter in a row. Then you have Pfizer, shares up 1%, raised full year earnings guidance. First quarter earnings sales also beat estimates. And Johnson & Johnson, they say they're seeking backing for an $11 billion baby powder cancer settlement, and their shares up 3%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. The economic indicators, we got them. We got them at 10 a.m. with Alex Steele, Paul Sweeney. Huge economic indicators at 10 a.m. Always on Bloomberg and on YouTube, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Tom Porcelli joins us without question for Global Wall Street, our guest of the morning. Tom Porcelli, I got 8 questions. This could be a 1-hour chat. If we get the yield structure to break through resistance and go to higher yield and lower prices, if the 10-year real yield at 2.28% pops out to a 231 or a 232, how does our world change?
You know, so good to be with you as always. And look, I would say this. I think as it relates to the Fed. So first of all, it depends why. It's rolling out, right? If it's because you get into strong data and people are building in, sort of greater odds of hikes, that's very different than if, things are sort of just looking better economically, but, we're not building in any sort of resurgent inflation, right? I mean, so there's so many moving parts. It really depends. But I think really germane to this conversation and specific to today with an FOMC meeting. What happens from a real yield perspective in the very front end, i.e. Fed funds? And what we know is that Powell has said this many times. He thinks that policy is actually pretty restrictive right now. And this is one of the key reasons why he had, sort of anxious to cut it this year. Now,
where are you, Tom? Where are you in the battle of maybe they should raise rates and keep up with inflation, or by theory, do they have to lower the rates to get the Fed funds rate under the real yield structure?
Yeah, I don't think that they're supposed to be raising rates at this juncture. I think I'm actually on the other side. I would actually argue that they should still be sort of aiming to cut rates at this point. I mean, the economy, look, I get it. If you just get the snapshot in time of a payroll report or an inflation report, et cetera, all that looks good. And there's no doubt that it has been. But I think when you sort of scratch, beneath the surface and drill in a little bit, I think what you see is that there's definitely some signs that things are actually looking a little softer. Again, softer relative to some really strong data. And I think this is something that the Fed has observed. And I think multiple times Powell has said now, you don't want to wait to get to 2.0%, because if you do, you'll do more damage to the labor backdrop. I'm very sympathetic to that general idea. Now, again, I thought for a while that they would cut rates 3 times this year. That is now obviously vanished, right? I mean, I think it's very difficult for them to get 3 cuts in. And in fact, what I would say is my view is almost becoming a bit bimodal, Tom, where I can see them going 0 times, and let's call this over the coming year. I can see them going 0 times, or I can see them going like 6. Because I think the longer you wait, the greater the risk that you actually have to load up on more cuts later.
Porcelli thinks like that, Paul, because he's taking the Hinckley picnic boat down the Hudson River every day. He's the only one on the planet who thinks they're going to cut 0 or 6, and that's that fresh air on the Hinckley picnic boat.
Exactly. Hey, Tom, I mean, we've seen over the last 2-3 months, inflation's a lot stickier than people initially had thought it would be. How does that impact your economic outlook?
Yeah, look, I think it matters why, right? It matters why inflation has been sticky. And I think, look, and I get it. Some people really hate when you do this kind of analysis, but I don't know why you would hate sort of knowing what's going on beneath the surface. And what's going on beneath the surface is, if you look at particularly last month, and actually the last couple of months, and actually the last 6 months, auto insurance, and again, I know people's eyes glaze over when you say this, auto insurance has been a thorn in the side of inflation. It's adding 0.5% to the month on month. And that's on average over the last several months. Last month, it obviously did a lot more damage. What's interesting about that, and it wasn't just auto insurance, it was also health insurance. These are things that are idiosyncratic. I mean, the Fed really has very limited ability to control those factors. And this is something we've been trying to drive home for the last several months. So I think, look, it's unfortunate because when you think about those things that are rising, like auto insurance, like health insurance, those are things that people can't escape. It's going to hit them. And I think it's fair to wonder to what extent does it actually hit them in their discretionary spending decisions. And I think that's something that, again, I think is one of these headwinds for us to deal with down the road.
So as we step back and we think about some of that sticky inflation, Tom, what's your view of the consumer out there? I mean, it seems like there's a tale of two cities. I mean, some folks are doing just fine if you look at the economic data, but boy, there's a lot of anecdotal evidence when you listen to companies saying their consumers are really struggling a little, on the edge there.
Yeah, Paul, I think that's exactly right. In fact, if you look at something like the Small Business Survey, I mean, the Small Business Survey, they give them sort of a list of things that they're worried about. And a growing worry for small business is now poor sales. And that's been the case for the last couple of months. Again, it's coming from a low level, but the sort of the direction of travel, I think, is what matters. So I would say that, yes, I think that's being supported in this idea of some struggles, are being supported in a number of different data points. The other thing I would say is, and this is, I think, something that, is, I think, just starting to sort of be realized by a broader audience. We were all sort of not dismissive of the rise in delinquency rates, because I think a lot of people thought, well, look, it's really being isolated in the sort of the lower FICO scores. But one thing that seems pretty clear now is that it's not isolated to the lower FICO scores, this rise in delinquency rates. It actually seems that hitting more near prime folks as well. So that to me is, again, one of these sort of underlying worries that I think, again, doesn't show itself today, but I think it can probably will over the next few quarters.
Tom, let's go to your claim, which is wage analysis. Yeah. The fact is ECI wages and benefits, it's coming down, but it's not coming down enough. When do we get wages and benefits back to norm? This year or next?
Yeah, so I think it's coming, Tom. I think this year the process will be ongoing this year and into next year, I think is the right way of thinking about it. And look, it's funny, after ECI yesterday, I sort of laughed to myself because you had this blowout versus consensus. I don't think anyone bothered to sort of pay attention to why, right? It was basically union wages, non-union wages, which are 95% of the pool. They've been mostly moving down. Again, not in a linear way, but mostly moving down. Moreover, if you think about sort of the direction of travel there, what sort of leads ECI? The quit rate does. And so just do this on your Bloomberg terminal. Overlay the quit rate with ECI and tell me what's going to happen. And by the way, the quit rate leads by a couple of quarters. So the direction of travel from a wage perspective, I think, seems pretty clear to us.
Okay, we got to leave it there. Tom Porcelli, thank you so much with Peach. I just can't say enough about his work claimed on wage dynamics. Paul, it's just real simple here. This JOLT survey, McKee tells me it matters, and now it matters ever more than it ever has within this fully employed labor mystery we're in.
Exactly. And the JOLTS is coming in at 8.68 million. And this is a number that historically, if you look back over the last 10, 15 years, it's been more like a 5 or 6 million kind of number. It spiked up during the pandemic to over 12 million. But it's still higher than expectations. And that might just be, I don't know, people just out of the workforce.
Paul, good luck to you. In a live chat today, there's 3 contractors that want to put 2,000 square feet off the back of your house.
Nice.
It's great. I mean, and I'm listening. They're all down in Texas. Our live chat on YouTube, it's great. Good morning, Mesquite, Texas. You can't have a house in Mesquite unless you've got a Cessna. You land in the backyard.
Exactly. Perfect.
It's like, good morning, east of Dallas, Mesquite, Texas. Here on YouTube, it's on Bloomberg Podcasts on YouTube, and there's a live chat. It's really, I'm learning all sorts of stuff. And we took to North Dakota yesterday.
We did.
Up by the Missouri River.
Fine.
They all speak French up there. It's from years ago. With our news in New York City, here's John Tucker.
All right, Tom and Paul, new developments on the pro-Palestinian protest at Columbia University and across the country.
Shame on you! Shame on
At the epicenter of the protest, New York City police moved in just after 9 o'clock last night, entering Columbia University's Hamilton Hall with a ladder truck through an upstairs window. Mayor Eric Adams said on MSNBC this morning that police had to move into Columbia University's Hamilton Hall for the safety of those children, as he put it. He blamed outside agitators for the building takeover. 40 to 50 people arrested at Hamilton Hall. No injuries reported. Adams said they'll face charges including burglary, trespassing, and criminal mischief. In Los Angeles early today, police there were responding immediately to a request for support on the UCLA campus after violent protests broke out there. Secretary of State Anthony Blinken continuing his push for a ceasefire between Israel and Hamas. He met in Tel Aviv today with the Israeli President Isaac Herzog and called on Hamas to accept Israel's terms for a pause in fighting in exchange for hostages.
We're determined to get a ceasefire that brings the hostages home and to get it now. And the only reason that wouldn't be achieved is because of Hamas.
And Secretary Blinken says the release of the hostages in Gaza is at the heart of U.S. foreign policy. The Senate approving legislation banning the import of enriched uranium from Russia. That sends the measure to the White House. The president has said he supports efforts to block the Kremlin's shipments of the reactor fuel. Russia actually provided almost a quarter of the enriched uranium used to fuel America's fleet of more than 90 commercial reactors, making it the #1 foreign supplier. And do you believe Christian Walker homered twice, including a 2-run drive in the 10th inning that gave the Arizona Diamondbacks a B-delayed 4-3 win over the L.A. Dodgers last night in Arizona.
They're bees.
A bee swarm atop the netting behind home plate, causing a delay of almost 2 hours. Players and fans waited for a beekeeper to remove the... They had to call this guy in, and they were so happy that he got rid of the bees. They let him throw out the first
Probably
pitch.
with the way the uniforms are. Really, they let him throw out the first pitch. That is great. That is fabulous.
So,
thank you for that update.
Yeah. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. Don't worry, Michael Barr will be back tomorrow.
Surveillance congestion update. Do you have a congestion update?
So the MTA in New York City, which is going to charge you for driving in Midtown or all of Manhattan below 60th Street, says June 30th, these new the new tolls go into effect for everybody driving a car. But of
it's
course,
original to America. This is like the first time.
Yeah,
in the US.
I mean, the UK has it. London
Stockholm
has it. And Stockholm, so,
And John Tucker, we're going to expense this for John Tucker. We're going to create a new item in the EXP Go thing.
Red Oak, keeper of the Amex, has aged.
I have to go to the Grand Fromage and, on my knees and beg to expense this.
Well, can I suggest parking garages above 60th Street is a good business?
Yeah, but you still have to come through the Lincoln Tunnel to get in Manhattan. I mean,
but
it doesn't matter where the garage is.
Then you go up the west side.
But he's on the Jersey Shore.
You're like mapping this out for me now? Forget it. Too late.
The New York Post had a map to help you.
Okay.
Yeah.
They're trying to help you.
Work from home. That's the help for John Tucker.
Your congestion update with our
Early
surveillance
retirement.
congestion reporter. It is Bloomberg Surveillance.
If these
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are falling. NASDAQ futures down 0.3%. S&P futures down 0.2%. Dow futures down 0.1%. The 2-year yield at 5.02%. That's down a basis point. The 10-year yield at 4.66%. And that's down a basis point. Over to commodities. Spot gold higher at $2,297 an ounce. Brent crude $85 a barrel. And we have Bitcoin down 3% at $58,000. Over to earnings. New York Community Bank Corp up nearly 19%, about 19%. Its charge-offs, provisions for potential loan losses. Well, that declined in that first quarter from the previous 2 months, but it was better than expected after that really tough quarter that it went through. MasterCard down 3%, cut its forecast for revenue growth for the year, and spending on its network actually missed estimates. And finally, Kraft Heinz. Shares are little changed, but it reported steeper than expected drop in organic volume for that first quarter. Net sales also trailed estimates. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Good morning, everyone. The Fed decides 1:30 this afternoon on YouTube, on radio, on television. Jonathan Farrell, Lisa Bramwitz, and myself, the great lineup to discuss the careful treading that the chairman will do. Tracy Ellowy's not here.
Yeah,
she has a dog that grazes like a cow.
Really?
So she's home because the beast like is in the backyard mowing the lawn, eating the grass, eating the dandelions, and all. So it's a solo with Joe Weisenthal. And Joe, I got to go to Hamptons.com after your wonderful show on fancy real estate. Just in the last week, 18 transactions, one over 20 million.
Wow.
3 between 5 and 10, 3 between 2 and 3. 8 between 1 and 2, and 3 under 1 million. I mean, the slowdown's over, right?
It seems as though there is this, you think of a city, right? And you think that there's going to be some sort of spectrum, right? Between the cheapest residences and then it gets gradually more expensive. And it seems like what's happening around the world is that there is this upper slice of the real estate in any market, whether it's the Hamptons, Miami, Aspen, New York City, Dubai, London, etc., in which the prices no longer bear any connection to the city. They only bear in connection to the other elite parts of the world. And you have these, the ultra wealthy billionaires or 100 millionaires essentially competing with each other to see who can pay more for real estate.
Is it ego driven, or is it just a sink for too much cash?
I think it's both. And I think I love the use of that word sink here because I think that's exactly right, which is, let's say you had a lot of money in some location, maybe with not the best rule of law, and you want to I want to put some money somewhere where it'll be secure outside my own borders. You actually want the price to be higher because then you sort of you can sink more money into that efficiently. And so I do think that's a really big story. Crazy. But there is also an ego element for sure when you look at a city like Miami or so, where it really does look like the ultra rich are competing with each other to see who has the most opulent penthouse location or something like that.
And I'm guessing that the ultra high end real estate is not really tied to the level of mortgage rates.
No, it does not even seem like financing is a big part. Apparently, there are some ways that you could buy and then refinance afterwards, but it seems like that the world of interest rates does not play much.
I have an opinion on this. I'm going to try to keep it ovid, folks, because that's what we do at Bloomberg Surveillance. The charade here is the taxes due on these properties. They're spending mega millions on properties, and they got a property tax equivalent to what Paul's paying in Summit, New Jersey. Shouldn't their taxes be a lot higher? Am I wrong?
No, I was wondering about exactly that, because one of the things, so we had this great guest who covers this stuff very well, Hiten Samtani, his own media organization that focuses on exactly this. One of the things he points out is that a lot of the developers of these ultra premium real estate, these developers are chasing this market, right? So if you think about maybe there's some sort of fixed or somewhat fixed amount of construction capacity in general, and if everyone is chasing that high end, what does that mean for just the construction of maybe normal high-end or normal priced real estate? And so if you want to think about, like, well, how do you have a healthy real estate market for everyone? It does make you wonder whether the answer is something on the tax side, so that some of this construction capacity gets redistributed.
Paul, walk through the numbers here. A working stiff is paying $5,000 of property tax. In New Jersey, where it's outrageous, somebody in an ample home, kids, the kitchen's nice, they got a pool in the backyard. What are they paying, 50, 40?
Yes.
But then the gazillionaire, for his gazillionaire property, he's not paying like 100, 150, is he?
I don't.
He's only paying like 75.
It depends where you are. If you live in the tri-state area, you're getting crushed. Miami is a fascinating market for me. I love it. One of the great things about the Wall Street Journal is the Fridays when they talk about some of these big homes around. And it's just
Joe looks at that. It's the first thing he looks at.
It's amazing, and these properties.
So I browse them to see which one I'm going to buy.
Exactly. I mean. Miami is an animal unto itself.
No, I think it's a big story because
it's a global market.
It absolutely is. Obviously, well known for being like a huge source of LatAm money, and it was one of these cities that boomed. Obviously, right in the the immediate wake of COVID. But I think that it's a bigger macro story than just a COVID winter. There's a lot of money flowing there. There's network. There are people setting up like businesses and people trying to bring universities and better healthcare and stuff to there. So the goal is to actually not just have it be a sort of
Have they gone through a summer though? That's what I want to know.
Joe Weisenthal here with Odd Lots, and coming up, this is really important because I know your foreign language at the University of Texas was Fender. What are you going to learn from Duolingo here? This is a big argument for everybody.
Totally. We had a fascinating conversation on the podcast yesterday. The episode will be out Thursday, so tomorrow, with Luis Van Ahn, who is the creator of Duolingo, the popular language learning app. But he is really like considered to be one of the most brilliant computer scientists, and he is one of the inventors of the CAPTCHA, which is how people prove to say Gmail that you're human.
Cool.
And so he invented that. So his whole life has basically been thinking about systems in which humans learn from computers and computers learn from humans, and that interaction that goes both ways, which is, of course, very important for the AI conversation, in which so much of what improves these models is that real-life human feedback. Is this a good output?
Can he pull AI into Duolingo so I can get a C- in French?
Yeah, so there's two ways they're doing it. So one is the AI is increasingly designing the course curriculums. And so they can say, like, well, are you on a good path? And it can modulate the quizzes in real time so that it's never too hard to be discouraging, but never too easy to be boring. And then the missing piece that it can now do is it can chat with you, which they couldn't do before. And everyone knows that's an important aspect of language learning. Now you can actually practice communication with the AI.
I mean, Joe looks, for those of you on Apple CarPlay, he's cut and chiseled today. It looks like it's just the photo shoot for Light Sweet Crude.
That's
the
right.
summer tour.
Thank
How's
you.
the summer tour shaping up?
I think we have a couple of shows in June. I don't know the exact locations yet, but no, I got a text message from our drummer yesterday.
Right.
He's like,
the drummer is always.
I was like, yeah, great. No, our bassist. I was like, yeah. He said, can we play a show June 2nd? I'll come back and let everyone know the details.
Very good. We will keep you up to date on that important date, June 2nd. Right after the Stones at Meadowlands.
Exactly.
Joe Weisenthal, thank you so much. Tracy Alloway at home. Crude. I hope the beast is okay. The dog is in the garden eating all the green stuff.
And
she's got her hands full.
Yep.
Tracy Alloway, Joe Weisenthal, Odd Lots. Look for that Thursday.
Great stuff.
Really important for everybody at home struggling with kids with foreign languages, Duolingo.
Stock's done great. Joe was just mentioning it to me. The stock's done pretty well here. It's up 60% over the last 12 months.
Yeah, it's because I don't own it.
$10 billion market cap. How about that?
What did we learn today in the Fed Decide so far?
Well, I'm waiting to go watch and listen to you and Lisa and Mr. Farrow at 1:30 p.m. Wall Street time. I think it's all about the language, the tone coming out of Jay Powell. Does he take this opportunity to be a tad more hawkish here?
I don't know how you get more hawkish at a 2.28% 10-year real yield. And you heard Tom Purcell say, the yield coming inside. The 5-year, the 2-year real yield, I'll have to look at them on a break here. But it's going to be fascinating. 1:30 this afternoon. It is a snooze fest, but it's not. And usually that's when the Fed has an opportunity to reset the market. What's he going to do? Come out uber dovish?
The markets would like that, but I don't think the data doesn't support that, Tom. Some of the data we've seen over the last 3 months on the inflation side has been much stickier than I think the market was discounting. I think it was much stickier than what Fed Chairman Jay Powell was thinking as recently as December.
Yeah, a lot of good voices out on that. We'll continue to bring you the best we can on voices. Meg, thank you out on live chat. Somebody said on May songs, Stairway to Heaven. I mean, it's a May song. I'll take your advice. Thank you out on YouTube, live chat.
In case you don't know, the piper's calling you to join him. Dear lady, can you hear the wind blow? And did you know your stairway lies on the whispering
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Bloomberg Surveillance. Coming up for all of you interested in the stock market, the conversation of the day. Paul, Gina Martin Adams, higher yields, we're all going to die.
Yep, I know, but I don't know. Gina's had, as you like to say, Tom, and I appreciate it perfectly, the courage to be in the markets.
Yep.
But we've had this rapid pullback here. I don't know what we do here.
Down 4.2% is just too much. Maybe we're down 5% when we open here with futures at negative 12 right now. We'll get to that in a moment. The Fed decides 1:30 p.m. this afternoon on YouTube. Go to Bloomberg Podcast. You go to YouTube, you search Bloomberg Podcasts, and it gets you there. You'll see live coverage of Lisa Abramowitz. She's wearing Fed blue today.
No, nice.
It's Dior. Lisa Abramowitz, John Farrow, and myself. We'll do the Fed coverage here at 1:30. Really good lineup of guests there as well. What else is going? Earnings are out. It's sort of like a lot of earnings, and tomorrow Apple. Have barely talked about Apple.
I know, and it's a big quarter for our friends at Apple.
And after Amazon, that's what you've got. Bloomberg Surveillance this morning on Apple CarPlay, on YouTube, search Bloomberg Podcasts. It's brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. And a rumor has it, Paul Sweeney wearing Tony Lamas when he goes down to Nashville with Alex Steele.
Oh, that's going to be big.
For that. You going to Ryman?
Oh, you absolutely. It's a great time down there.
You're going to be at Opryland.
Yep.
All that.
Yeah. I don't think Alex has been to Opryland, so it's going to be an experience for
Pro
us.
tip, the Pancake Pantry, the pecan pancakes.
Okay, noted.
They go because they serve you for like 6 people. Good morning, everyone. How about a Bloomberg Business Flash? Here's Lisa Mateo.
You got it. Futures right now, they are falling. Concerns about higher for longer interest rates with all eyes on the Fed's policy decision later this afternoon. Also comes after the U.S. Treasury kept its quarterly debt sales steady and said it's going to start buybacks this month. So we have NASDAQ futures down 0.4%, S&P futures down 0.2%, Dow futures down 0.1%. The 2-year yield at 5.02%, that's down a basis point. The 10-year yield at 4.66%, and that's down 2 basis points. Earnings also in focus today. We have Amazon up nearly 2%. Two sides to the story. So the company's cloud unit posted strongest sales growth in a year, but its sales forecast for the current quarter, that fell short of consumer from estimates because consumers are just watching their spending. Server maker Supermicro Computer, they're down 9%. Investors had these high expectations, but quarterly sales, they fell short of estimates. And Advanced Micro Devices down 5%, had a slowing demand for chips used in video game hardware. After the bell, we'll hear from the likes of Zillow, eBay, DoorDash, Etsy, and Carvana. That is your Bloomberg Business Flash. Tom and Paul.
Let me editorialize there. NVIDIA's cleaning their clock. Is that maybe, like the CFA shit? Right now, hugely anticipated. Gina Martin Adams joined us. Gina, from Dow 40,000 roughly, a correction's 36,000, down 4,000 Dow points. Okay. We haven't had a correction since Nixon was president. Do you buy how do you buy, if you're an adult like you, take the phrase buy the dip. How do you affect that?
Well, I think, frankly, there are a lot of different strategies, and every strategy, it needs to be tailored to each individual investor's risk.
Would your lawyer tell you?
Let me just caveat with that, because I think if
Rich,
you're talking...
can we have our general counsel in next time to be sure?
I have to caveat, because if you're talking to a retail investor, you're talking to a very different animal than many of the people that I speak to on a daily basis, which were much more tactical investors. But the simplest way is, as a retail investor, to dollar cost average your way into markets over time, agnostic of any individual price point at any given point in time. Because over long periods of time, if you're adding to your equity portfolio every month, every quarter, every year, you're ultimately catching the entire wave up, right? But for a tactical investor, I do think you need to follow the sequence of what's happening with the technicals of the market very, very closely, because technical trends do tend to lead everything. The market tells you everything
what do you
need
see
to
right
know.
now?
And momentum did reach a peak all the way back at the end of last year. We saw at the end of the first quarter that we were due for a period of chop in the equity market, and we've entered that period. One thing I want to remind everyone of, we had a 10% correction in stocks in the midst of 2023.
Yes.
We all think of that market as this huge gainer. we forget the fact that we had a 10% drawdown in the S&P 500 between July and October of last year. And yet we're still sitting at new highs. So you tend to get on average a 10% drawdown in stocks every 9 months.
Really? I did not know that.
Historically, yeah.
Every 9 months.
Could we get another 10% drawdown in the midst of a longer-term secular bull market that began in October 2022? Absolutely.
Yeah, it's like manufacturing
perfectly
children.
within reason. And we did certainly see the signs coming into the second quarter that we were due for a period of chop. I think the market is trying to figure out who the new leadership will be. Will tech continue to lead? Can we continue to sort of pound the table on tech and communications? Or will we start to see other sectors pick up the ball, where tech is certainly posting really strong peak growth right now?
And we're going to hear from Apple tomorrow. We heard from Amazon last night. 60% of the S&P 500's effectively reported earnings here. Any themes you're seeing? Any takeaways you guys are seeing?
Yeah, it's been really interesting because, first of all, 80% of companies are beating expectations, so really strong beat rate.
Yes, okay.
5.6% growth versus early season expectations of 3.8%, and that includes monster charges from the healthcare space due to some accounting anomalies. So without those, you're looking at closer to 8% growth year over year, which is really close to matching where we were in the fourth quarter of 2023. Much better than anticipated. So it clearly is not earnings that are the reason for the market weakness. I think that is the big takeaway, is we're not really seeing a lot of weakness in earnings to justify kind of a pullback in markets. Instead, it does seem to be about the technicals as well as what we're seeing in the macro. The bond market movements have been somewhat vicious for equities to contend with, and those are related to the inflation dynamics, which are also creating a little bit of fear, a little bit of tension for the equity investor right now.
All right. I know you guys and your team, you look at sectors, you look at factors. What's the driving, what are one of the themes you're talking to your clients about these days, whether it's a sector or a factor or anything different?
So we look at a lot of different things. I think it depends on the client again, but a lot of clients want to talk to us about tech. Tech specifically, is it overvalued? Are we at a point in time where we need to really pare back our tech exposure? How do we think about tech's relationship with interest rates? Is that the end-all be-all for tech? It really is. You know, I get everything from tech's in a whole new market bubble to tech's in a new paradigm. So it really is about tech specifically.
I'm reading Michael Mauboussin, the giant at Legg Mason and Credit Suisse back 25 years, and he really emphasizes the overweight by analysts on terminal value versus what companies do quarter to quarter, year to year. And the path to the terminal value is far more important than calculating the actual terminal value. I got Amazon with a 60 multiple, the forward multiple's 40, but that tells me 2 years out the multiple's like 25 or 20. Did they make a mistake yesterday not giving Paul Sweeney a dividend?
Yeah. I don't know if they made a mistake not giving a dividend. I will say that has been the trend of tech companies this season, is general capital deployment in the form of both buybacks and dividends, and then also announcing the impact of AI in their capital spend.
How does dividends change total return?
Well, obviously it adds to total return. If you've got price return and then you add dividend, you get a total return that's higher. So an investor who is interested in dividends has certainly been very keen to see tech deploy dividends. I don't necessarily know that deploying a dividend specifically is better than deploying a buyback.
Well, Paul, it's un-American that Amazon is not a dividend aristocrat.
Yeah, I
mean,
agree.
I don't know
But
what else to say.
what we've seen is some token dividends coming out of some of these big tech companies. So we'll have to see if they ever step it up here and put out a real yield. Valuation, real quick, Gina. I don't know how to value this market. If I pull out some of the big cap names, it feels like I'm not overpaying for this market. But boy, just on the surface, a lot of folks are concerned about that.
Yeah, I think you're absolutely right. When we look at the overall market multiple, it does look expensive relative to long-term history. It's not 2021 levels or tech bubble levels by any stretch of the imagination. But I think stage of cycle is really important to consider here, because you're thinking about valuing markets on earnings that are somewhat still artificially suppressed due to the earnings recession that we had in 2022, 2023. So you've got to consider in the idea that earnings are likely in a pretty significant recovery, certainly much better than analysts are anticipating, and normalize your multiples for that. But even when you do that, it does look like tech is very expensive. You do have an enormous valuation premium on the stocks that people feel most comfortable in their earnings outlook. You would anticipate that they'll grow into those multiples, and you'll see rotation into other components of the index, which are still trading below their pre-pandemic average.
Gina Martin Adams, thank you so much, with Bloomberg Intelligence on the stock market. I don't think she answered buy the dip. We'll have to see what she says on that. She's going to publish on that this week. It's part of a carefully managed, diversified portfolio. That's what the lawyers would say. Gina Martin Adams of Bloomberg Intelligence. A lot of interest here. And again, as she said, it's with interest rates elevating. I'm looking at the 10-year real yield, 2.28%. That will tick by tick move with the comments of the chairman this afternoon, 1:30 this afternoon. The Fed decides. Lisa Abramowitz, John Farrow, and myself with a great setup of guests for conversation on this important Fed meeting on YouTube, on television, on Bloomberg Radio. With our news in New York City, here's John Tucker.
All right, Tom, police moved in last night, shut down the epicenter of pro-Palestinian campus protests. This was the scene at Columbia University in Upper Manhattan.
If you refuse to disperse, you will be placed under arrest and charged with disorderly conduct.
The NYPD moving in shortly after 9 p.m. Using a ladder truck, they entered an upper floor of Hamilton Hall where protesters had barricaded themselves inside. Occupying the campus building seemed to be the final straw for university officials and Mayor Eric Adams. He told MSNBC this morning the NYPD in Columbia identified a substantial number of people who took over Hamilton Hall as outside influencers and agitators mixed in with students.
There are people who are harmful and are trying to radicalize our children, and we cannot ignore this.
Columbia University officials have requested a police presence on campus through at least May 17th. That was the scene in New York. In Los Angeles, police responded to a request for help at the UCLA campus. Clashes broke out early this morning at a pro-Palestinian encampment after the university declared it unlawful. And while campus protests continue across the nation, 3 more university presidents being called to Capitol Hill to testify about anti-Semitism. The presidents of Yale, UCLA, and the University of Michigan will all appear before the House Education Committee on May 23rd. Clinics, patients, and abortion rights activists in Florida bracing for the impact of a new law that will transform the state overnight from one with the fewest restrictions for the procedure in the South to a place where it will be all but banned. The 6-week abortion law signed by Governor Ron DeSantis last year and confirmed by the Florida Supreme Court earlier this month takes effect today. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Tom.
Paul Sweeney, where did buy the dip come from? I don't remember that from our youth. I don't remember that phrase.
I do. I kind of remember it from my trading days. But I think it's just a function of this, I would say, this 40-year bull market.
Yeah, I agree. I mean, and you got the right number there, 40 years. I take it from 75. Some people take it from 81, 82. But it's sort of like the bond market before it cracked 3 years ago.
Yeah, I mean, and buy the dip has been the trade. I'm talking 87, 98. I mean, you think about some of these big pullbacks. It's been, if you bought, I mean, you made money from October 19th, 1987 to year end, you made a fortune.
Yeah, Good Morning the Lonely, like Ben Laidler at eToro, the great technician Ralph Ancampora, and Ed Yardeni that have had the courage to, on real stress, say, just stay on board. It is America, and it is different. We will have to see. Right now, futures, Martin Adams makes the futures advance -11. Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still falling. NASDAQ futures down 0.3%. S&P futures down 0.1%. Dow futures now little changed. Over to the 2-year yield at 5.02%, down 1 basis point. The 10-year yield at 4.65%. Down 2 basis points. Over to commodities, spot gold higher at $2,295 an ounce. Brent gold $85. Brent crude $85 a barrel. NYMEX crude $80 a barrel. Let's get to earnings. Yum Brands, you know them from KFC, Pizza Hut, Taco Bell. They're down 4%. Sales fell for the first time since 2020. Starbucks, they're down 12%. They saw the same picture with sales. Consumers pulling back on spending. Shares, yes, they are down 12%. And a recall from Ford. Recall nearly 243,000 Maverick pickup trucks. They're being recalled. The taillights may not light up, and that will increase the chance of a crash. That is your Bloomberg Business Flash. Tom and Paul.
Thank you, Lisa. What a day. We're, moving on here. At 10 o'clock, important economic data. Is Alex in today?
Absolutely.
She's not worked from some oil patch somewhere?
No, she's back here at it.
Okay.
She had a little bit of a holiday last week. We granted her a little bit of rest and relaxation
Paul Sweeney
time.
and Alex Seal, 10 o'clock with important economic data. This is a joy, and the path is great. There are schools that are acclaimed over decades for rigor, particularly in STEM. And it wasn't like a marketing meeting 7 years ago at Rutgers where they said, geez, let's do STEM. It's popular.
No, they've been all over this stuff.
They have been doing STEM at Rutgers since time began, and the double major of statistics and mathematics at Rutgers is sort of like Oxford PP&E. It's like a huge deal. Joining us now, Ari Wald on technical analyses with Opco Oppenheimer. We're thrilled he could join us today. I love your note, Ari. It's hugely concise. Who's going to grab the bid in the market given higher interest rates?
I think the bulls ultimately went out here. And that's why our recommendation to clients is to buy the dip. I'll run off that here. Yeah, I think the point that we wanted to stress is that the action we're seeing is very consistent with a bull market correction. I think it would be reasonable to see a final setback into this May period. Seasonals are weak, but that typically is then followed in a first-term election year in particular, the best 3-month stretch of that from June to August. And I think that bull cycle does reassert itself. 70% of these bull cycles make it to their 2-year anniversary, and I don't think this is going to be any different.
I think a lot of people don't know that when you're CFA CMT, you follow technical analysis of the bond market as well. The trend chart of the 10-year real yield or the 10-year yield or the Paul Sweeney 2-year yield at 5.02%. What do the charts of fixed income tell you about confidence to invest in the equity market?
Sure, and we have had this coinciding rise in interest rates, which is with the S&P's pullback from an all-time high. I'd argue it's neither high nor low rates, but stable rates that has historically been a tailwind for equity returns. And I think that what is needed, we need rates to just stop going higher. And I think that moderation should be a catalyst for a continuation of equity strength. And I think that's what you'll should see happen in the rate market. We did have a reversal of a 40-year downtrend in interest rates in that 2020 to 22 period, but trend reversals don't have to go from down to up. And I think we're in this leveling off period where interest rates should be more range bound. I think 5% marks the upper end of that range. I think from October 2023, that was the top. But be careful what you wish for. By the time we get lower rates, we could be getting closer to that economic recession. I don't think we're there yet either. Instead, this not too hot, not too cold, range-bound rate expectations is reasonable to us.
Ari, what kind of screens well for you guys? I mean, a lot of folks out there, they're not sure whether, how much risk to take out there in terms of sectors they're looking at versus maybe I need to be a little bit more defensive. What screens well for you guys in terms of just sectors?
Sure. So we're momentum investors that overlay technical analysis on top of our process. So the sectors that screen best for us are going to be industrials, financials and technology. They have the most the momentum attributes to it, and that makes sense for us. We're playing by the roadmap that this is the second year of a bull market cycle, and we want to own the sectors that have historically outperformed in a rising market environment. And those are three likely candidates. They've been established leadership. Typically at this stage of the cycle, the leadership's established and they continue to drive market gains looking ahead. So it would be areas of infrastructure within industrials, capital markets, and financials. And of course, the semiconductor group and tech too. I think you buy the weakness.
Ari, I was weaned on point and figure charts, and the great Louise Yamada, iconic at Citigroup and of course on her own, codified the word distribution, which is that things change. Now we've had a bull market where it's, selected stocks and even sectors, ETFs, they've been on a one-way street, up, up, up. Are you begging for a back and forth, a distribution to provide veracity to a bull market?
Distribution would be a concern if we start to see pockets of the equity market break lower and fewer stocks lead the market higher. But you bring up this interesting point about the very narrow leadership. We've argued it's not necessarily narrow participation, but narrow leadership as far as the outperformers. And if you look at the driver of growth and non-growth, it's really been driven less by anything spectacular on the growth side, I would argue. I would say that the steadiness of the NASDAQ's ascent over the years is actually underappreciated. We haven't seen rate of change levels anywhere close to the late 1990s. That instead, the outlier has really been how poorly the rest of the equity market has done, and why I think the case for convergence is catch up rather than catch down, and why I think the market is really possibly able to position to surprise higher over the coming years.
Are you and John Stolfus on speaking terms? I mean, he's in the fundamental world and you're in the tech world. Do you guys talk?
I love John. Every time I see him at a firm function, we chat it up there. But we do approach markets very differently, but at the same time have come to a lot of the same conclusions through the years.
Ari, thank you so much. Ari Wald with OPCO. Really appreciate that. And, I love the idea that he's done it the right way. CFA, CMT. He's in it, but he's got the fundamental mathematics. When I lecture on technical analysis, Paul, the number one thing I tell these kids, understand the mathematics of the y-axis, whether log or semi-log. If you can't do the basic algebra of the y-axis, you don't get to play.
And Tom, you mentioned Louise Yamada formerly of Citigroup and Smith Barney. Her mentor was Alan Shaw, if you remember back in the day. When I first came on Wall Street, Alan Shaw was the dean of technical analysis there of Upham & Company, which became Smith Barney, Upham & Company. And so they've always had a strong heritage of technical research there.
Oh, that was fun. Ari Ward, we'll do more with him and Christopher Rohn as well. Full disclosure for those of you that do keep charts, I'm massively trend-based. Stochastics is not what I do, which is probably why I've been able to not lose. Well, I'm in triple leverage. The chart of the triple leveraged all cash fund. It's a little boring to say the least. Futures advanced. Gina Martin Adams single-handedly staunching a difficult morning.
Yes.
See how she did that?
I know, absolutely.
We're at negative 20. We're now negative 9. Dow futures at negative 24. The VIX 16.02. I mean, it is. I'm not saying it's by the dip. It's not our job to say that. But, Paul, it's just a dip.
It is, yeah. I mean, again, the pullback, the drawdown, however you want to call it, we've seen it here in this, really kind of coming out in the month of April, 4 or 5%, because we started the year and the first quarter was up 10%. So a little bit of a pullback here. And then I think the market's focusing, obviously, on the Fed today, this afternoon, and you guys will have
How about the economic data you and Alex are going to have here in 25 minutes?
ISM, we got manufacturing.
ISM, big deal, May 1st.
Yeah, we're going to have the folks from the Conference Board on at 10:02 a.m. To break down some of that data as well. So we'll have that. So it's funny to see ISM manufacturing sitting spot on 50 right now, neither contracting nor growing in the manufacturing economy.
Dollar stronger off DXY, yen 157.70, euro yen, wow, 168.42. We continue to study Japan. This evening, look to Bloomberg's efforts in Asia. Tanya Chen leading our print coverage there. Interesting to see what happens with yen and the Pacific Rim after the Fed meeting. From New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. All right, how the markets open ahead of Fed Day. Policymakers expected to leave rates on hold once again. We shall see at 2 p.m. Wall Street time. Our coverage begins a half hour before that. We also received some jobs data, too. That report from ADP. Payrolls increased 192,000 last month. Let's get off to the markets right now. We're off and running. S&P 500 down 0.1%. The Dow, that is little change right now. We'll get over to the NASDAQ. It is little changed as well. So not much movement. Over to the two-year yield at 5.01%, down 2 basis points. The 10-year yield at 4.63%, and that's down 4 basis points. Over to commodities, we have spot gold. That's higher at $2,300 an ounce. And Brent crude, $85 a barrel. NYMEX crude, $80 a barrel. At the bell, definitely want to check in with Amazon. They're up 3%. That is your Bloomberg opening bell report. Tom and Paul.
Lisa, thank you. Things have changed. Yields are higher. Paul Sweeney out front of this saying, Tom, I'm watching the 2-year 5.01% right now, quiescent over the last 10 minutes. Dow green, others red. There's a churn to the market, what you'd expect before a Fed meeting. We'll have that for you in 4 hours. The Fed decides on YouTube, on television, on radio. Right now, with the new bond environment, one of the best things you can do, as Paul mentioned, is go to the institution of the West. And I just can't say enough about the ignorance of East Coast people in West Coast, left coast money. I mean, it's just amazing to me. They don't know who Capital Guardian Trust is. They don't know, remember in the old days, Robertson Stevens and Weissel up in San Francisco.
Doing all the tech stuff,
And TCW is definitive. Brian Whalen is definitive at TCW. Why did you bring him in?
Yeah, the good thing is he went to some school up in New Haven, Connecticut. I forget the name. But when I see a Donaldson, Lufkin, and Jen Red on someone's resume, that gets my attention because they had he was very like
15 when he was there.
Quality research department back in the day. And then me and my Credit Suisse First Boston colleagues, we bought DLJ, and all the DLJ people walked out the door the next day. So that didn't work out so well for us. Brian Whalen, he's co-CIO, fixed income at TCW Group. Brian, we're going to hear from the Fed today at 2 o'clock Wall Street time here. What do you think we're going to hear? Maybe what do you think we should hear?
Well, thanks for that intro, Tom, and I like the comments about the West Coast, East Coast. Look, what do we think we're going to hear? Probably more of the same. I think you're going to hear something along the lines of that the Fed is comfortable where they are with interest rates. We don't think we're going to hear anything about them potentially needing to raise rates. But I think they're going to take what the market's giving them, which right now is only one anticipated cut this year and another 2 next year, which is an incredibly slow pace and still keeps, the funds rate incredibly tight and restrictive, and keeps not just nominal yields high, but real interest rates exceptionally high. I think they're going to have to talk about inflation. They'll say it in the statement, and certainly you're going to get the questions. And more likely than not, what you hear on inflation is that, the cent has, it's gotten hung up a little bit. Some of the headline numbers have been a little higher than both the Fed and the markets anticipated. However, I think you'll hear them say that it's probably still a descent, and that as we get into the second half of the year, we'll continue to see the trend and downward trajectory and getting something close to their target.
So higher for longer, it sounds like. Given that background, what's the house call at TCW? How do you play that?
Well, listen, we're patient. We're value investors. We try to look at the facts, and regardless of where short-term market prices are going, from our standpoint, and when we look at not just the data, but when we use our team of, we got 100 people outside my office here, and they're talking to companies, and they're looking at asset-backed securities and the performance of mortgages, and they're looking at commercial mortgages. In short, we think these interest rates are biting, both nominal and real interest rates. We are seeing little tea leaves all over the, the economic spectrum that are telling us, kind of like Fisher said, it's not a switch. We haven't had rates jump to a level that's kind of like a knockout blow to the economy, but it's chipping away. It's, it's kind of like the body blows, and we're seeing that, and we're seeing it slow down. So what do we anticipate? We think the market, whether the Fed goes in June or they go in September, or whenever they go, we do believe that when they go, they're going to have to go at a rate faster than the market's expecting, because we think the economy is slowing more rapidly than the market's anticipating at the moment.
Okay, so on real yield, this is critical, folks. I'm going to get a little geeky on you here. We can do this with Brian Whalen. The lift in real yields, does it impinge linearly, or is there some gamma to it, some acceleration, like every tick up that Jerome Powell sees in the 10-year or the 5-year real yield is an ever larger stress to our economic system?
Non-linear, you're exactly right. Every basis point from here hurts a little bit more than the last basis point, is the best way to say it. And you're looking at real yields right now at around 230 basis points. And that's, that not only is that biting, but it started biting, 75 to 100 basis points ago. We have an economy that went through over a decade of basically zero interest rates. Borrowing was easy. This is a levered, kind of financial economy. When you see a jump in rates, the delta, the change from a zero interest rate environment to a 5% interest rate environment, it hurts. And I'll tell you one thing too. Interesting, you look at spreads in like investment grade corporates and high yields, and they look very tight. They look close to the all-time kind of post-GFC tights. However, we're seeing a lot of like at the lower parts of the market, not just consumers, but the high yield, like your triple C companies.
Right.
We're seeing a lot of problems out there. We're seeing companies that normally were very, they worked well with lenders. They're being very aggressive because they can't afford their debt, and they're having to react like kind of trapped rats.
Okay, and this goes to TCW with the vision you have. And while Brian's yammering away there, I'm at the Bloomberg looking at the 5-year real yield, sort of like more germane maybe than the 10-year. And off the Volcker, the great moderation from the time of Volcker, we're at 2.6 standard deviations to a higher yield structure. Brian, what will that mean to the interest rate market if we pop 3 standard deviations up at like 2.73%?
I think that's the knockout blow. I don't think this 2.7, I don't think this market could really even handle 2.5. But if we saw a jump up to like 2.7%, which is, rates, last time we were at these levels, that kind of level in real interest rates was right before the financial crisis. Clearly, the economy and the markets couldn't handle it. But this time around, we'd see the same thing. And then what would happen is that if you get rates up that high, you're going to see, equity markets crater. And then you're going to hit financial conditions. And what you're going to see is a consumer who's already stressed, and they're borrowing a lot more than they used to. And yes, spending is high, but they're doing it because of the wealth effect, because they look at their equity market portfolio and they say, hey, I feel good. I've got more money than I had last year. Once you see that drop on your screen, on your broker screen, that changes. That'll be the end. You'll see the consumer the spending actually start to come down, and that'll be the end of the tail end of this growth cycle.
And the heart of this, Paul, which Brian Whalen just said there, is the media's focused on the parlor game of what yields are doing, and it redounds over to our look at our balance sheets.
Yeah.
All of a sudden, it's like, okay, where's my balance sheet? Where's my assets? Where's my too many liabilities?
And I don't know, Tom, every time I talk to Brian or his colleagues at TCW, I want to jump off a bridge here. I mean, these guys have been, I think, consistently cautious here. So, Brian, am I just going to go buy a 2-year treasury at 5% and just kind of, that's my life now?
It's not bad. I mean,
no,
5 years,
not.
Right. It's not too bad. I mean, look, the bond market is yielding about a little over 5%, like you said. And then, we like to talk in total rate of return, so just to be geeky for a second, it's not just the income or the yield we just identified, but it's like what happens with the prices, over the next 12 months. And, if we're right, not only are you going to get that 5%, yield and that coupon, you're going to get upward movements in bond prices. And that could be the order of, 5% or more, which if you add your 5 plus another 5 or more, you're talking about bond returns well north of 10%. That's pretty attractive.
Brian, 20 seconds. Do you have Dodger tickets? Asking for a friend.
And we can talk offline. I'd be happy to help.
There we go. Brian Whalen, he'll be back with us next week.
Yes,
Brian Whalen with TCW. Just can't say enough about that. Was brilliant. We're going to feature Brian. Eric tells me we're going to feature Brian on Single Best Idea out there, the podcast that we'll tape here in a moment. Red and green on the screen. I don't know. The VIX under 16.
Yep, that's notable.
All clear. Gina Martin Adams. She's holding my hand. I'm staying in the market. With our news in New York City, it's John Tucker.
All right, Tom, Paul, and Lisa. Police response to the pro-Palestinian protest at Columbia University. Hundreds of officers went into the school last night, storming a building demonstrators had taken over and arresting dozens of people. Mayor Eric Adams telling MSNBC this morning outside groups were taking charge of the student protests.
There was no way I was going to allow those children to be exploited the way they were being exploited. And many people thought that this was just a natural evolution of a protest. It was not. These were professionals.
And clashes broke out on the campus of UCLA. The LAPD called in early this morning. Pro-Palestinian and pro-Israel demonstrators began setting off fireworks and hurling objects at each other. This is the Los Angeles school declared the pro-Palestinian encampment on campus unlawful and in violation of UCLA policy. A 6-week abortion ban takes effect today in Florida, replacing a previous restriction of 15 weeks. The National Right to Life president is Carol Tobias.
I'm very excited. About 50% of all abortions occur after that point in pregnancy. So this bill is going to save a lot of lives.
The closest abortion clinic for somebody living at Florida's southernmost tip will now be a 14-hour drive away in Charlotte. Last year, more than 84,000 people got abortions in Florida, more than in almost any other state in the South. Many of those patients travel from other states. New York jury in former President Trump's criminal hush money got some accounting testimony yesterday. Michael Cohen's former banker telling jurors that the so-called fixer took steps to avoid scrutiny from bank officials when he created a shell company back in October 2016 to pay Stormy Daniels $130,000 for her silence. There's no trial today. And the Biden administration says it will cancel $6 billion in student loans for people who attended the Art Institute. That's a system of for-profit colleges that closed the last of its campuses in 2023 amid accusations of fraud. Saying the chain lured students with pervasive lies, the Education Department is invoking its power to cancel student loans for borrowers who were misled by their colleges. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Tom.
Olga Kharif, Bloomberg News with a scoop. Bitcoin Jesus charged with evading almost $50 million in taxes.
Oh, boy.
I mean, that's a bolt-on story here to collapse in Bitcoin. 70? If Bitcoin is a stock, it's all we'd be talking about.
Exactly. We're off. It was at 73,000 and change as recently as mid-March. Yeah. And here we are down to 57,500. That's a 21% decline and just since mid-March. And, we saw that bid up, Tom, in Bitcoin as the spot ETF started. Got approved.
This is over? Is this Balchunas' fault?
I think this is Balchunas' fault in terms of the volatility we've seen in Bitcoin. It's been part due to some of those the ETFs that have allowed spot Bitcoin ETFs, and that took a ton of funds flowed into those ETFs, as Eric and his team was reporting, and now maybe we're getting kind of the backside of that trade. But boy, the volatility, that's a constant for Bitcoin, that's for sure.
Bitcoin Jesus, he's got a real name, Roger Vera, but they call him Bitcoin Jesus. The charges are he owes, quote, at least $48 million.
Okay.
And buried in the story, Olga's got it all here. It's a great story. Is it something like a level of transactions of $250 billion, billion dollars.
Yep.
240 million.
Taxes always get you.
Money.
Taxes always get you there.
They do.
Al Capone.
They do. Yeah, there it is. I mean, Olga Kharif, thank you for that. And of course, we'll have a lot more coverage on that. Looked at 10 o'clock here for economic data in 18 minutes with Alex Steele and Paul Sweeney. Jolts and important PMI data as well. That to the Fed meeting. The Fed decides on YouTube, on radio, on television. Look for that at 1:30. Great lineup of guests. Bob Michael will join us.
Really?
I just learned.
Nice. Very good.
They don't tell me who's going to be on.
No.
I just sort of show up.
Yep.
And, wax philosophical. You know. It was going to be a snooze fest. I don't buy it this time. No dots, no forecasts. It's just like Powell's. What's he going to say in this environment? He should come on with us and warm up.
Exactly. Come on at 1:30.
That would be good.
Wall Street time.
Good morning from New York City. Red and green on the screen. Bloomberg surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Investors kind of tiptoeing before Fed Day with little movement in stocks right now. Over to the bond market, the 2-year yield at 5%. That's down 2 basis points. The 10-year yield at 4.65%. That's down 3 basis points. Moving the markets, we'll start with tech. Server maker Super Microcomputer down nearly 13%. Investors had these high expectations, but quarterly sales fell short of estimates. Advanced Micro Devices, they're down 5%. And it had a slowing demand for chips that are used in video game hardware. That's the issue there. Over to CVS Health. They're down 18%, lowered its yearly earnings outlook for the second quarter in a row. And finally, New York Community Bank Corp. up nearly 17%. Results were better than feared after that rough quarter. That is your Bloomberg Business Flash. Tom and Paul.
Thank you so much. Greatly. Lisa, thank you. I mean, you kept us stable today. Paul and I, our heads are spinning.
Yep.
Lisa's the only reason that, we're got our heads screwed on.
Yeah.
It's like,
I wish my husband and then, Tom, you got the surveillance snap coming up. Then presumably
somebody asked me that. No,
surveillance lunch, maybe?
No, I don't get the surveillance nap today. The way the schedules work out, particularly, I got to go to makeup for like 3 hours.
Yep.
And I don't get the surveillance nap, but I still get, by contract, the surveillance beverage.
Okay.
So that'll be a lot later. Speaking of which, joining us right now, David Gura, of course, the star of the Big Take podcast. Lots to talk about. I just want to get your opinion, David. David and I have not spoken. We're not on, as a general rule, we're not on speaking terms.
No. Only when the mics are on.
Two big stars.
The campus protests.
Yes.
You grew up within this milieu with your acclaimed father. We won't go into that right now. But what is your take on how these protests are different than 1968?
That's a great question. You bring up my dad, who's a professor at UNC, and we've been talking a little bit about that. He was a student at Harvard in 68, 69, so exactly. He was present on campus when all of this was happening. Yeah. He grew up in Western Massachusetts, working class family. It was a new world for him in many ways, and he's recounted to me watching those protests unfold from his dorm room and the undulations and tumult that Harvard and many campuses faced in 68, 69. He allowed to me that this feels in some ways similar. They're not as big. Where he is in Chapel Hill, a flag was taken down yesterday. The chancellor walked out and raised the American flag as a result. So it's tense. That happened on the last day of classes there. I think that the timing is odd, and that's a key difference here. At the end of the school year, UNC has exams starting tomorrow. Obviously, Columbia's graduation is on May the 15th. We're pushing ahead to some kind of deadline here that I think is different from what we saw in 68.
The Big Take, you take a different take, I should say. We tried to get Chairman Powell this morning, and he said no.
The ask is out.
Michelle said no. But you've been thinking about this. What are we going to see from Powell today as you address it on the Big Take?
We had a fascinating conversation with Kate Davidson, who helms our Fed coverage at Bloomberg News, and Anna Wong, who is our chief U.S. economist at Bloomberg Economics. And I found Anna's insights so fascinating. She used to be at the Federal Reserve, worked with Ellen Mead, longtime researcher there, who has since taken a job at a university 10 miles from Chapel Hill, the name of which I can't recall right now. Paul can help me out here. With Ellen Mead, who's at Duke, and something that Ellen pioneered while she was at the Fed was looking at natural language models to assess what people are saying about the Fed, what Fed speakers are saying. And Anna has pioneered a model like this at Bloomberg that's looked at 60,000 headlines on the Bloomberg terminal about the Fed. And so we focused on this dovish pivot, the surprise announcement that Jay Powell made at the December meeting. She and her colleagues have assessed that, in fact, the pivot was real, and it added to the inflation that we've seen in this country since. So it's made the job of Jay Powell going into this meeting, going forward, much more difficult, much more complicated, and really just fascinating insights from her. Again, look, it's very data-driven. As we kind of listen to Fed speakers, this is giving you a lot more data.
And I think a lot of folks are probably going in today saying, maybe we'll get somewhat of a walk back of that a little bit. I'm not sure how he would word it, but a lot of folks feel like he would like that to happen, like the market to kind of walk it back, although the market kind of has walked it back, I guess.
I asked her, would you call what Jay Powell is trying to do and might do a walk back, another pivot? The phrase that our colleagues on the news team are using is a reset of the clock. And so what we talked about is Jay Powell on the sidelines of those IMF meetings participated in this event at the Wilson Center with the Government Bank of Canada and kind of began a more hawkish pivot. Call it retracking, whatever you want, but I think that's what we're kind of looking for today, is how he makes a move contra to what he made in December, how big of a hawkish pivot that's going to be.
So the Big Take, the podcast, I mean, I love the Big Take. We focus on these stories because they're just so well reported, so in-depth research, in-depth sourcing, and usually they're topics that are top of mind. What are some of the things that you guys have been looking at and will continue to look at in the future? Yeah, so the piece that we're looking at going into a big trial next week of Bill Huang, the former head of Archegos Capital Management. I forgot all about him until I just read something today.
Couple of years have passed, but he's lost his entire fortune, and so Kathy Burton and her colleagues have done a piece just about how he's been biding his time, how he's approaching this trial. That's what we're going to be looking at on Friday. But as you say, Paul, there's just a wealth of great stories produced by this newsroom and by our colleagues in research as well. It is an embarrassment of riches that we get to go through each week.
And I forgot how that whole Archegos thing was not an immaterial factor in the downfall of Credit Suisse.
Exactly.
I mean,
amazing. It was a $5 billion
$5
loss for that bank, so I don't think you can attribute the entire collapse of it to the collapse of that family office, but it certainly had a profound effect, and the ripple effects were felt across Wall Street.
Yeah, David, one of the things we're really focused on here is that Sweeney's trying to go to not one but both of the Stones concerts.
Yeah, you bet.
In the Meadowlands. I mean, Thursday,
He missed them at Jazz Fest. I think they're at Jazz Fest. They were at Jazz Fest, or they're going to be in New Orleans.
With the concert too, but I think you and I got to look at another New Jersey concert, which is Lyle Lovett's coming up with Lisa Loeb. I mean, Lyle Lovett out there again.
When's the last time you saw Lyle Lovett?
I saw this a long time ago.
I saw him at the Birchmere about a decade ago. He puts on a good show. I mean, that's a wonderful venue. Yes.
I mean, he changed. You take the bluegrass world that you're in, and he came out and basically took singer-songwriter with a Texas twist. And I mean, If I Had a Boat came out. We'll play it Monday for you. But the bottom line is Lyle Lovett's out there is as big a deal as the Rolling Stones, frankly.
For you, for me, for all of us. Yeah. I thought you were going to ask about my trip to Disney World, Tom. You threatened to do this,
please.
and I'm happy to report
Surveillance
that
Disney World reporter David
the
Gura.
theme parks correspondent has returned. Have you been?
Did you mortgage it? No, I've never been. Have you mortgaged the child?
I didn't mortgage the child, but I did up the line of credit on the credit card going down there just in case. Yeah, on the advice of some colleagues here. But I survived.
Was it organized? Restaurants, food? You'd have to wait in line?
It was very good. I never went as a child. You talked about my dad. My dad was not somebody pushing us to go to Disney World. But I've made good on that. I filled that hole in my resume now, and it was all great. I mean, the kids were happy. We sat by the pool, and we had one. Everyone said you got to do the Guardians of the Galaxy ride, and so we go through it. My two younger sons are getting more and more panicked as we go, and then at the last minute they see it, totally freak out, and my wife has to take them out, and I just do it alone with my daughter. So it's a good ride.
Nobody's doing the spinning teacups anymore.
We did the spinning teacups. I'll show you a picture later.
So when you see the earnings release come up, there's going to be a little footnote for the Gura family.
The Gura bounce, for the room at the Polynesian.
We had a sudden surge in revenue coming out of the parks.
My advice on this, folks, for what it's worth, is Anaheim has a certain charm.
Yes.
It is tiny.
More approachable.
They've put some money into it. I just adore Anaheim. I vowed I will never go to Disney World.
Maybe we should do the surveillance trip. I was hoping you might let me use the surveillance timeshare down in Orlando.
The Gura family will have lacrosse camps at Disney World. Yep. That's a moneymaker.
A bold prediction.
David Gura, the Big Take, an important conversation on Chairman Powell, and then much more to come up here, particularly on collapsed asset management.
Listen to it before your Fed decides.
Good primer, well, I said it was a snooze fest.
Appetizer.
Maybe it'll wake me up. David Gura, thank you so much. We move towards 1:30. The Fed decides. We'll have that on YouTube, on Bloomberg Radio, on Bloomberg Television, but far, far more important, 5 minutes from now, you'll get key economic data. It is May 1st. There's a May song and all that, but
May 1st is
the bottom line, Paul, I'm sorry, you got the JOLTS data alone here at 10 a.m. is a big deal.
That's right. Alex Steele's going to join me, and we'll break all that economic data down, Tom, and we got a lot coming up here. But again, you look at the market here, I guess as you would expect here before a Fed meeting, a little bit of red and green, not much going on the index level here, but plenty of earnings to break down for this Fed. We've had about 60% of the S&P 500 reports.
On May earnings, David Gura said you got to pay the Bays. Here's the Bee Gees, first day of May. Good morning.
Christmas trees are small, and you don't ask the time of day. but it